Peace, power, and profit, everybody. Welcome to Urban Economic Empowerment Show. So, guess what? I know you're probably saying, girl, it is not January, it's not time for tax season, but I think it is, right? I always get started early. Want to make sure that you are halfway through the calendar year and that you are filing correctly. And I never take for granted there's always a new sole proprietor or someone who's getting an independent contract. And most people these days are probably getting 1099s because businesses are suffering in more ways. Some of the small businesses where a lot of individuals may work, and so they don't really know the repercussions of a having a getting 1099s from working at businesses. They just know, oh, I'm not paying no taxes. And then they kind of get caught up when it's time to file taxes because they don't understand, they don't know the regs, they don't know what they need to do. So if you haven't done so already, you need to download publication 334. It's publication 334, which is the tax guide for small businesses. Those individuals who use the Schedule C. Okay. I didn't say S Corp. I said those individuals who file using the Schedule C. And so this publication was updated in February 2nd, 2024. So it is the most recent publication out there, right? So it starts off with, are you self-employed? Are you self-employed? Are you a self-employed person if you are a self-employed person if you carry on a trade or business as a sole proprietor or an independent contractor? So here's a cautionary note. You do not have to carry on wait, hold on. Wait a minute. Let me check something real quick. Let me check something really quick. It says you do not have to carry on regular full-time business activities to be self-employed. Having a part-time business in addition to your regular job or business may be self-employment. So this is kind of confusing for a lot of people, and they don't really understand when they're doing a lot of the freelance work, things of that nature, that they could be self-employed. If you're getting compensated, especially if your revenue is going over $600, it can be considered as a self-employed business, and you can file self-employed taxes. Okay? Trade or business. A trade or business is generally an activity carried to make a profit. The facts and circumstances of each case determine whether or not activity is a trade or business. You do not need to actually make a profit to be in a trade or business as long as you have a profit motive. You do not need to make ongoing efforts to further the interests of your business. Let me say that again. Let me highlight it. Somebody needs to screenshot it. You do not need to actually make a profit to be in a trade or business as long as you have a profit motive. It says you do not need to make ongoing efforts to further the interests of your business. So let's talk about the LLC first. An LLC is an entity formed under the state law by filing articles of organization. Generally, for income tax purposes, a single member LLC is disregarded as an entity separate from its owner and reports its income and deductions on its owner's federal income tax return. For example, if the single member LLC is not engaged in forming and the owner is an individual, they may use a Schedule C. Sole proprietor. A sole proprietor is someone who owns an unincorporated business by themselves. You are also a sole proprietor for income tax purposes if you are an individual and the sole member of a domestic LLC, unless you have elected to have your LLC treated as a corporation. Independent contractor. Independent contractor are people such as doctors, dentists, veterinarians, lawyers, accountants, contractors, subcontractors, publics, stenographers, and auctioneers who are in an independent trade, business, or profession in which they offer services to the general public, or generally independent contractors. However, whether they are independent contractors or employees depends on the fact in each case. The general rule is an individual is an independent contractor if the person paying for the work has the right to control or direct only the result of work and not how it will be done. The earnings of a person who is working as an independent contractor are subject to self-employment tax. For more information on determining whether you are an employee or independent contractor, see publication 15-A, Employers Supplemental Tax Guide. All right, so let's go back and talk about that just again. Okay, you have, what's some contrarian thinker? You have your LLC, for the small business owner, you have a sole proprietor, and then you have an independent contractor. The difference between them is that LLC small business owners are small business owners are those who file with the Secretary of State, and they're a single member disregarded entity, right? And then the sole proprietor are those individuals who are unincorporated, right? And then an independent contractor are more those business who are independent of business or profession, those individuals who kind of act on their own, right, to do a particular job. So those are the differences. So if someone asks you, your small business owners, what type, if you have an articles of incorporation, you tell them that LLC, your entity LLC. If your business is not incorporated by the Secretary of State of anywhere, then you're acting as a sole proprietor. And then if you are an accountant, or maybe you're a contractor, general contractor by trade, then you are more considered an independent contractor. Does that make sense? All right, people get that mixed up. All right. Now, exceptions, qualified joint ventures. If you and your spouse each materially participate as the only members of a joint owned and operated business, and you file a joint return for the tax year, you can make a joint election to be treated as a qualified joint venture instead of a partnership for the tax year. Making this election will allow you to avoid the complexity of the 1065, but still give each spouse credit for Social Security earnings on which retirement benefits are based. For an explanation of material participation, see instructions for Schedule C. So here's a cautionary note. Only businesses that are owned and operated by the spouses as co-owners, parentheses, not in the name of the state law entity, qualify for the election. So only businesses that are owned and operated by spouses as co-owners qualify for that election. That's the QJB. Thus, a business owned and operated by spouses through an LLC do not qualify for the election of qualified joint venture. So boom, there it is. If the spouse owns the business as a co-owner, you can either file as a um, partnership or a qualified joint venture. If it's own if it's an LLC and the spouses own the business, then you cannot file a qualified joint venture. All right. So now there's a question many people have to ask themselves. Are you a statutory employee? So you said, what is that, girl? A statutory employee has a check mark in the box 13 of their W-2 form, W-2 wage and tax statement. Statutory employees use Schedule C to report their wages and expenses. So if you looked at your W-2 and you see box 13 check, then you know they're considering you to be a statutory employee. Businesses owned and operated by spouses. If you and your spouse jointly own and operate an unincorporated business and share in the profits and losses, you are partners in a partnership. Whether or not you have a formal partnership agreement, do not use Schedule C. Let me repeat that. Business own, if you and your spouse jointly own and operate an unincorporated business and share in profits and losses, you are partners in a partnership. Whether or not you are a formal partnership, whether or not you have a formal partnership agreement. Do not use a Schedule C. Instead, file a 1065 U.S. tax return for partnerships. So basically, if you and your spouse, you and your boo get in a business, y'all need to file as a partnership. If you're sharing the profits, if you're sharing the income, you guys need to file as a partnership, not a Schedule C. So here's an exception: community income. If you and your spouse wholly own an unincorporated business as community property under the community property law of a state, foreign country, or U.S. territory, you could treat the business either as a sole proprietorship or a partnership. Oh. States with commonly property law includes Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. A change in your reporting position will be treated as a conversation of the entity. So here's some additional information you need to know. What you need to know. All right, so there's a table. Table 1, it provides a list of questions you need to answer to help you meet the federal law tax obligation. Each question is located in the publication where you can find related discussions. The IRS mission to provide American taxpayers top quality service to helping them understand and meet tax responsibilities and enforce the law with integrity and fairness to all. All right, so let's see where the questions are. So that was cool. That was pretty interesting because I learned how to separate these three: the LLC, the sole proprietor, or calling yourself an independent contractor. I know sometimes people say, oh, if you get a 1099, you're independent contractor. Well, usually independent contractor is reserved for certain types of trade or certain types of businesses. The difference between the sole proprietor and an LLC is that one is incorporated and the other one is not. So you're a sole proprietor when you are unincorporated. If you have incorporated your business, then you LLC, single member disregarded entity. And that's, you should refer to yourself as such. All right. So what you need to know about federal taxes. All right. So here we go. What kinds of federal taxes do I have to pay, and how do I pay them? So let's go into the finances. So, but before I go there, because I'll probably get into that after I pick up my nephew. Let's go to real quick. Let's Google. Keep this tab and let's Google will um Cash App, PayPal, or Square issue a 1099. So let me see. So this is from the Cash App. All right. So it says there's a thresholds are based on the aggregate gross transactions volume processed on all Cash App for business and Square point of sales accounts using the same tax ID number. All right, so let's do this. Let's go to let's go up. All right, here we go. The Form 1099-K reporting. The IRS requires Cash App to issue a 1099-K to Cash App for business account holders who meet an annual threshold for the form. So it says, will I receive a 1099-K? For 2023 taxpayers, if you have a business account and receive more than $20,000 and more than 200 business transactions in 2023, you will receive a Form 1099-K by January 31st, 2024. A $600 reporting threshold was originally set to take effect for the 2023 taxpayer year. But on November 21st, 2023, the IRS announced a delay on implementing the change. If your state has lower reporting requirements, then Cash App may report amounts below the federal threshold to meet those requirements. All right, so let's look at the list. So here's the list, and you can look it up and find your states. So my state ain't on there. We don't have a lower requirement. All right, so I think, let's see what else. Who else got it out there? So it's April 2024. So don't forget, so you have so that's April 2024. So they're saying the IRS delayed what the last minute filers who use PayPal and Venmo need to know. The IRS reporting change in delay, but you still need to report your self-employed income. So if you filed your taxes yet this year, you have until midnight April the 15th to submit. If you received a freelance income this year through PayPal, Venmo, Cash App, or Zelle, you might be confused about the 1099-K changes means for you. It says originally set to kick off at the beginning of 2022, the IRS planned to implement the new reporting rule that would require third-party payment apps like PayPal, Venmo, Cash App, Zelle to report income over $600 or more per calendar year to the tax agency. But the IRS has delayed it. This new reporting requirement for the tax season. So if you are waiting for the 1099-K to file your taxes, you may not be getting one. So I think that, yeah, here we go. So what is the 1099-K 600 rule? Well, under the new reporting requirement, first announced in the American Rescue Plan, third-party payment apps will eventually be required to report earnings over $600. Uh-oh, let me let Chris in. Over over $600 to the IRS. For your 2024 taxes, which you are filed in 2025, the IRS is planning a phase-out rollout requiring payment apps to report freelancer and business owner earnings over 5,000 instead of 6. The hope is that raising the threshold will reduce the risk of inaccuracies while also giving the agency, the payment apps, more time to work towards eventually the $600 minimum. Previously, third-party apps only set 1099 cares to users who use $20,000 in commercial payments across more than 200 transactions. If you're self-employed, you should already be paying taxes on your total tax income. Even if you don't receive a 1099 from all of your earnings, it isn't a new rule. It's the tax reporting change. The IRS will be switching the reporting requirements to payment apps so that you can keep tabs on transactions that often go unreported. So what this rule mean in 2023? Well, some of you probably already filed your taxes. I'm gonna tell you anyway. The IRS paused the reporting requirements for 2023. This means you earn freelance income, you'll report your earnings like usual when you file your tax return, your taxes this year. You just won't receive a 1099-K form from third-party apps unless you receive over 20,000 in payments across over 200 transactions in 2023. Instead, you may receive 1099 NECs from any business you work with. Even if you don't receive a tax form from a client, you're still on the hook for reporting all of your self-employed income. How this work and how will this impact 2024? For the tax year in 2024, you'll receive tax form 1099-K if you earn more than 5,000 from a freelance client or side hustle through third-party payment apps. Affecting the taxes you'll file in 2025, the IRS may decide to, again, delay this rule or alter the threshold, so it's possible this requirement could change. So basically in 2022, it was supposed to kick off. A lot of the third-party clients, they wasn't ready, so they deferred it to 2023. 2023, some were still not ready. They had the $20,000 threshold or 200 transactions. You may have gotten it for the business, you may not. 2024, they're thinking about lowering, increasing the 600 to 5,000. So if you receive more than $5,000 or 200 transactions, then you issue a 1099, but that could be deferred, but that's the talk on the table right now. However, if you're doing business and you're receiving any business income, you should be reporting it anyway. So that has never changed. All right. So let's see if I have anything. All right. So I wanted to make sure I had put that out before you guys, before I went to the next piece of it. For the small business. So let's just do a little recap of what we learned so far then. Using the IRS publication reg, the number one thing we learned about self-employed is how you categorize yourself, which is limited liability company as a single disregarded entity, or a sole proprietor or an independent contractor. And so now we know that you call yourself a single disregarded LLC if you have incorporated your articles of incorporation or organization or formation in your state. If you have not incorporated your business, then you are a sole proprietor. And then if you are a lawyer, veterinarian, doctor, dentist, a general contractor, or someone who operates in some type of independent trade, and your time and your business is not orchestrated by someone else, and you set your own rules or how you do things, when you come to work, how you work, then you are a independent contractor. What's up, Chris? Peace, power, and profit, everybody.
What's good? Peace, power, and profit.
Just just rolling on it. So did you kind of understand that what I just said? Just understanding how to categorize your business?
Yeah, you got to make a little changes now since they want to be specific. But I'm gonna still stay a sole proprietor at the end of the day.
Are you incorporated?
No.
Then you are a sole proprietor.
Yeah.
I
Mm-hmm.
am a single disregarded entity because my LLC is incorporated.
Mm.
Now, when my LLC start making, if I start profiting big dollars, then I'll elect for the IRS to file my taxes as an S corp, and that's
Right.
because I'm starting to profit. So, it's important that on our tax forms that we begin to check the right box, because all of this stuff have its own tax implications.
Right. Mm-hmm.
So yeah. Oh, let me screenshot this.
I mean, people better take notes. This shit is very important, man.
Right. So
Very
let's go to. I'm gonna come back to the questions a little later after I pick up Zion, and I'm gonna go through the questions. So I'm gonna go down here and do, yeah, right here. So this was last year. The publication hasn't been updated yet. Of course, publications, the updates don't change until October 1st because we're still in the federal year. Um, the tax things don't start changing over until after September. And then you could get the new forms and all of that stuff that will say 2024, but right now everything gonna say 2023. So it says, what's new for 2023? The following are some of the tax changes for 2023. So the maximum net self-employed earnings subject to the Social Security part of the self-employed tax is $160,200 for 23. There is no maximum limit on earnings subject to Medicare. So when you're filing your taxes, if you never really paid attention to your tax form and you are self-employed, you're filing self-employed. If you earned more than 160K, then um you wouldn't be it max at the you don't get taxed for the Social Security part. It goes up to the 160, but you always will get taxed Medicare. All right, and then you got the standard mileage rate for 23 for cost of operating your car, van, pickup, or panel truck for each mile used for business. It was 65.5 cents a mile. That has increased. I think it's 68 cents. Let me see. Cents a mile now. That mileage is super important. Super important. You should have, if you don't have an app tracking your miles, you should at least have a spreadsheet to and from location and the distance and the date. And that's how you track your miles. And you can keep that mileage tracker in your vehicle. And every time you do something for business, you should be tracking it because that's the inspectable item. So I have an app. So anytime my vehicle moves, it automatically tracks for me. So I don't have to do that. All right. So that's pretty much how that goes. Redesign the the 1040 SS. That's the Schedule C SE. That's the self-employed piece of it. So they redesigned that. Bonus depreciations of the Section 168K that's going to phase out with a reduction in applicable limit from 100% to 80%. Energy efficiency, commercial buildings reduction. So you could get a deduction for having energy efficient buildings, commercial cleaning vehicle credit. Businesses that buy a qualified commercial cleaning vehicle may qualify. Why is he yelling and he see I'm live? Oh my God. There's always one. Hold up. Hear me, Chris?
Yeah.
Okay, that knucklehead. I know a lot of people are. All right, and then the business meals, the temporary 100% deduction for business meals expense has expired. The business meal deduction reverts back to the revision of the 50% allowable deduction beginning January 1st, 2023. So yeah, man, that was good when they was doing 100% meal deduction. But man, they switched that junk. they put it they put it to back to 50%. I'm getting ready to leave. I'm getting ready to leave. Here you go. I'm about to go get some. Okay. So, um, so there's that. That's how that goes. So the maximum net earnings, the maximum net earnings, the maximum net self-employment earnings subject to Social Security part of the self-employed tax for 2024 is 168,600. So as you can see, it went up. It went up because for 2023 it was 160,200. So it went up $8,400. See how they do us? So if y'all making them big dollars, that's y'all right now. And then the standard deduction mileage rate for 2024 to operate your vehicle, is 67 cents. So in 2023, it was 65 cents, 65.5 cents. And then for 64, it's 67 cents. That's important.
Sure. Why do you think I'll be driving to the stores and malls that's far?
Because you want to legitimize your expenses. And if you come audit you, you want to show, hey, I'm doing business. You come audit me.
Hell
My
yeah.
transactions are real. And
Yeah.
actually, Chris, I'm glad you said that because for business, right? Okay, so when you do your taxes, a note pop up. Say,
Okay, you breaking up now, Mo. You breaking up.
well,
You heard me?
what
You
you
breaking
say?
up, Mo. You was breaking up.
Do I need to repeat it?
Yeah.
Okay. Well, when you're filing your taxes, there's a note that will pop up that says, if you took a loss like consecutive years, it would say, hey, here's a cautionary note. You took a loss in the last few years. You need to consider whether you're doing a hobby or you're doing business. Well, let's go to the IRS. Let's go back up to the top and see what the IRS says about business. Let's read it from the source. Would they say source up, right?
Yep.
Here we go right here. It says Are you self-employed? It specifically says straight from the IRS Reg Publication 553. You are a self-employed person if you carry on a trade or business as a sole proprietor or independent contractor. You do not have to carry on regular full-time business activities to be self-employed. Having a part-time business in addition to your regular job or business may be self-employment.
Facts.
It says trade or business. A trade or business is generally an activity carried on to make a profit. The facts and circumstances to each case determine whether or not activity is a trade or business. You do not need to actually make a profit to be in a trade or business as long as you have a profit motive. You do not need to have ongoing efforts to further the interests of your business. Hey, I'm shouting, I'm preaching better than you clapping.
Yep.
That's why.
It said, as long as you have profit motives, that means that if you operate your business and you making some money, but you still have expenses and you just really haven't carried that profit as just yet, you are still in business and you are still making money. The problem comes in, and I know somebody's gonna say, well, what happens when you don't make any money? Now then, when you need to be considering whether you have a hobby or a business. For the trade, the business or the trade, the independent contractor or the sole proprietor, if they're making money and their expenses, their income just does not outweigh their expenses, then they're still businesses.
I think
Yep.
If they've earned revenue, their business, they are actually attempting to make a profit because they're making some money. It's those of you who out there who have $100,000 in expenses and zero income. You are the one that they have to consider, that has to consider, do you have a hobby or do you have a business? Right? And so that's the rule of thumb behind that.
Yes. Correct.
And let me show you what we mean about this mileage law, because I don't want to lose anybody. And it's very important that you get these bits and pieces, because I'm going to go through all the deductions. You get these bits and pieces, and I'm giving it to you straight from the rig, right? So this is my QuickBooks self-employed app. So it automatically picks up, and I can show it to you either in the cash flow manager, where I can track the mileage. I can track it in my QuickBooks app. So when I start doing more than them little 40 transactions of business a year, mileage IQ doesn't work for me because I'm gonna be paying for it. So why would I pay for something that I'm just tracking mileage when I can get an entire accounting app and I can track mileage, I can do invoices, I can track all my expenses and put it automatically according to the Schedule C, ready for taxes. So I can get paid. So instead of me paying for several different subscriptions in all these different apps, I just put it all in one. And of course, my econ is my direct sales business. So it automatically comes with an accounting system. And I use this one because it automatically does it for me. And it puts in my transactions. And I just pay the fee. But as you can see, if you're looking on the screen, it tracks it. What did I say earlier? You have to have the day. You have to have the and this one goes so far as giving you the time. And then it gives you the to and from a location. And so This is personal, so I swipe personal. Class friend. Okay, this right here from this is personal, right? Personal, personal. Let's see. And this right here is business. So boom. So when I go business, so this is what I do. I'll put either I'm meeting with a client or I'm volunteering with the veterans or I'm about to head to a flight, right? So I met with a client for lunch. See how easy that was? It takes you less than 2 seconds to properly track your mileage. So this one right here, I met with some veterans, right? So that's my charitable miles. So I put the volunteer one and it'll track that. Same thing here. See how easy that is? That's why I use it. And all that, and I could and if I go to my tax reports, you'll see how I can report right here. It's picking up the mileage. So at the top, you'll see how 2024 I track the mileage and what it's giving me.
Yeah, I need to get my QuickBooks back, man, because I have been doing a lot of traveling the last 4 or 5 months. So
Yeah. So the mileage piece for important. And I'm gonna go back. So let me get out of this publication really quick. I need to come back to that one. And I'm gonna
let's
go
do it.
to
Let's do a shout out too. I want
go
to
ahead.
thank Mo. I want to thank Mo for also keeping me in business as well. Me and Mo do a lot of business behind closed doors. Not just sneakers either, but this is our business too. We got traveling business too when we travel and go places. But that's what y'all supposed to do, man. You're supposed to, you know, take advantage of this stuff.
Right.
Go
A lot
ahead,
of people. Well, I'm gonna shout out Chris because we come up with ways that we can legitimize business because we're not interested in. We don't have to fabricate information.
Nope.
I did a tax return for somebody today, right? And at first I was really scared because I was like, man, what y'all do all that money? But when I started doing the tax returns and start tracking those expenses off of the income statement, and I was showing her how to track it all so that when she does it, because she has QuickBooks, so that when she does it, it'll be really easy for her. And when we were done, she actually spent more than what she earned, and she earned a lot. It was like almost half a meal, right? Actually over half. But guess what? She spent that too. And
Right.
I said, and I didn't do anything. I didn't change anything. I didn't fabricate anything. I didn't embellish any numbers or anything. I said, so see what happens when you track your expenses? You're actually spending this money.
Mm-hmm.
This is all business. And guess what? You legitimately reported it to the IRS.
Yep. Facts.
Now, granted, you ain't gonna get no fat return. Why? Because you hardly paid any taxes.
Right.
And that's what people have to get. You get tax return. You get tax refunds when you pay too much taxes. They not just or you getting some type of credit for business. And so they're giving you back some of the money that you paid into. For example, the employee retention tax credit. That was for people who retained employees during the COVID years and paid taxes while those employees were working. So what the government did is say, you know what? As an incentive, you guys were the essential workers. You had to pay taxes. We're not only going to give you money back, we're not just going to give you what you were authorized to pay in taxes. We're going to give you more. So they gave up to $10,000 per employee on that calculation. And so that's why a lot of people jumped on that, just like they jumped on PPP and EIDL,
And that's why a lot of people got in trouble making up stuff. But if you were legitimately paid an employee, they gave you money back, almost double to triple what you paid. And so those are credits. And so a lot of times, you know, I come on live and people say, man, why are you still doing that? You've been doing that since 2016. I said, well, honestly, I'm just legitimizing my business. So if you don't see beyond me coming on and not having viewers, if you don't see that, if you don't see beyond, then you
3-2 split. What is David's new cost base?
Oh, my bad. Go ahead. No, my bad.
Yeah. So if you can't see beyond that, then that means you don't understand business. Because with or without an audience, I did what? Let me go back. Let me show you again. Right here. I had a motive, a profit motive. As long as I have a profit motive, meaning I am taking initiative to earn a profit by doing business, I am doing business and I can take advantage of the business tax deductions. So when Chris gives a shout out back, because we did a business trip to Cancun. And guess what? We actually did business. People say, oh, y'all ain't do no business trip. Okay, you don't know us very well. We would literally have a round table discussion for hours. And everybody is at the table will teach somebody something that we don't know.
Facts.
So Chris is the investing person. So he teaches us about that mainly. I'll talk about, sometimes I'll probably bring up tax stuff or whatever. You know, Sherry will bring up her strength and what she like to do with business, correspondence, Tranisa correspondence, you know, and we'll go on and on and on. Chandra's into transportation now. She got box trucks and things of that nature. I remember going to New York. Sean was on a in a business meeting with us. We did Sean's into box trucks and things of that nature as well. He, you know, they're into publishing books and that kind of stuff. And everybody, of course, already know Garfield or whatnot. But you know, so when when he gives that shout out, I definitely agree. I think I passed my exit. Ain't this something? we we normally, you know, we really do business for real, and we really hold each other accountable for doing business the right way. We don't really, I'm not into making up numbers when you already have the numbers. If you literally account for all the transactions you do in business, you already have what you need. You just don't, you're just too lazy to account for it. That's all. And also what I didn't show is in the app. Let me go back to it. It pulls in your transactions. For example, right here, I made $500 the other day. Well, I invoiced the person $500 for doing some business, and so they paid me through my QuickBooks app, and here it is hitting my account. So all I have to do is do business, and I can attach. I think I have my invoice. Took a picture of it. Well, they didn't give me a receipt, so I don't have that. But anyways, my invoice accounts for what it is, and I hit save. Bam, there it is. Right. So now we're getting ready to go to Vegas. That's my airline ticket. Well, I'm going to a paparazzi convention, so I will mark business. It'll automatically go to business travel. And right here, I'll put paparazzi convention. And I can actually attach, see, paparazzi. Because we got paparazzi convention in Vegas. And I can live to my paparazzi account. Go here. Go to my order history. And paparazzi don't play. I paid for my ticket right here. So here's my ticket, paparazzi. And then when I go back into my app, where it says so paparazzi convention, add my note, attach my receipt, go to my library, attach my receipt, and hit save. And if I go to review, where's it at? It's right here. Bam. There it is. And if I hit view right here, view receipt, there it goes. There's my proof. See how easy that was?
Mm-hmm.
And that's what we do, right? And that's a quick go. Let me show you one more thing, right? So also, I'm there when we're in Vegas, right? So anybody who's in our circle who's coming with us, if they don't already have a business card, my oh man, I gotta log into it. Darn it, what I got it under? Man, what is my business? I forgot I had another phone. Got Blink, Chris?
Huh?
Got Blink?
Who?
Look at the ratio.
Blink.
Blink. No, I don't have Blink.
You ain't got it?
What's that?
It's right here.
Ask you guys because it's coming.
I'm about to show it to you right here. There it goes. Oh, I'm glad. So now I can give to Chris. I can give you Blink. So Blink is my business card, my digital business card. And it has
Yeah.
Okay.
Yeah.
So while I'm in Vegas, when people are gonna be asking me, hey, you got a business card, I can give them, I'll send it
I'll always look at it as shares.
my contacts. So when they go to and they click on my business card, they'll say save to contacts, and you'll see all of my stuff. When they say my contact, everything is on there. And you're
Right.
done. And it's gonna be in contacts. And so what I would do is I would give a block of instructions on how to have a digital marketing site, a digital outreach. And I got two. I got one for personal LLC business. Hold on, what else on that? Oh, I have to log in. If I would have logged in, you'd have seen my second one. I got one for just veterans, and then I have one for all the other businesses. And as you can see, I have everything on here. I have my Google Voice number. I have my how to get paid. I got my Cash app. I got my Stash app. I got my Acorns. I have my icon. I have my YouTube. I got my paparazzi. I got my CMOS. So I'm ready for business at all times.
Right. Yeah.
I share my card, baby. You getting everything, right?
Right.
And I got my website, and if I click on it, I finally got my website squared away, my domain name squared away. I had to call because Vistaprint is now partnered with Wix. So I got my website up. I got my quote by Dr. Wilson. How different would the education be if we went to school to learn to create jobs for ourselves? And I have all my little stuff. Sorry. Get in where you fit in. And I'm about to remember the fella came on and showed us how to do T streams, how to put your product, people can buy merch off your site. That's what this was, but I have to go back to the website. See, I had some stuff. I had to go back to the website and fix it.
Okay.
Right? So that was that. Go back here. So yeah, so when we talk about, it's the simplest thing about business can, get your funds. And that 67 cents a mile, y'all listen to me. Anytime you see the IRS increasing, you already know there must be some benefits over there. You already know it's some benefits because let's look up the mileage rate history and let's see how long, because they never used to just increase this mileage rate like this, right? Mileage rate history. I bet they don't pay you mileage in April. Stop being messy. So let's do history of IRS mileage from 1994 to 2024. Let's look it up. So let's see if they have a chart. There we go. Here it is, right here. Chart. Let me take it. Let me see if I can save it. So I'm gonna put it in a slideshow. Right. So let's look it up. So we'll see when the rates start making a difference. Right? Let's check it out. I'm about to be stopped in a second. Let's do a practice. So let's see. You always want to follow the money. Follow the money. All right. Let's check it out. You're watching them driving. All right. So 1994, the mileage was 29 cents a mile in 94. That's when I graduated out of high school. All right. It stayed between, then in 95, it went up 1 cent in 95 to 30 cents a mile. And then it kind of lingered in the 30s for a long time, all the way up until 2005. Look how long it took to get to 40 cents. Then it went from, in 2005 to 2008, it went to 50 cents, 50.5 cents. And then from 2000, and then check it out, 2008, that's from January to June, it was 50.5 cents. Then from July to December, it was 58.5 cents. I didn't know anything about mileage then, right?
Right.
And then it from 2008, it dropped in 2009 to 55 cents. I bet we switched who was in power, because it dropped way down. And then it went from 55 cents all the way down to 51 cents in 2011. And then in 2012, they decided, okay, I mean, that's in January, from January to June, in 51 cents. And then from July to 2012, it went up 4 cents to 55.5 cents. And then so from 2012 to 2016, it dropped to 54 cents. And then that's when I learned about mileage. And then ever since, well, it dropped in 2017 back to 53.5. And then all of a sudden, it was 2017 all the way up to now. So check it out. So from 2017 at 53 cents, 0.5 to 22, it was at 58.5%. And then all of a sudden, that bad boy in July 22, that jumped to 62.5 cents. And now, last year, 65.5, and then 2024 year is 67 cents.
Yeah.
What they say, follow the money.
Yeah. Keep going up. Keep going up to $1 if you want to.
Because that's where they get their favor. Ain't no other place. So let's see what's going on. I like this. I had to steal these from my PowerPoints so I could talk to the kids about it. So from April 2019, the gas was 31 cents. The IRS delays rate change due to the blowback. So what's the blowback, Chris? I know you know.
Hmm?
What's the blowback?
To what? My bad.
It says in 2019, in 1999, the IRS delayed the rate change due to a blowback. What was happening in 2019? That's something for us to explore with the stocks. And then 2025, it was Hurricane Katrina, so they went up to 58.5%. I guess they want to give some people some benefit of the doubt. It was moving around, things were, And then in July 2008, the soaring energy prices during the financial crisis. That was the housing boom, right? Housing bubble, right? 2018. And then in 2011, it was record high energy prices influenced the Middle East unrest. So it dropped. And then 2022, the demand resurgence post COVID-19, 62.5. So that's the reason behind that, behind the rate changes. So it says, understanding the standard mileage rate. The IRS standard mileage rate offers businesses a simple way to compensate employees for work-related driving, lowering overhead costs for firms compared to company car fleets. It is reassurance employees of fair reimbursement for using their personally owned vehicles while reducing the amount of administrative labor they must perform to claim the benefit. It is a lightweight form of economic stimulus when compared to heavier handed measures such as quantitative easing, and as the tax savings go directly to businesses, their drivers, and secondly to the federal government, which takes in less revenue by cents per mile method, but saves indirectly, but reducing the cost of staff for the IRS. Imagine how many IRS agents would be required to verify claims for actual expenses and correlate receipts for on-road purchases for every business in America. A simplified formula makes sense given the outsize in demand. Okay, so basically we have the mileage rate deduction so that if you are doing work, if you are going places in your vehicle, in your personal vehicle, but it's company. Oh, hold on. Hold up. Somebody just chimed in. Hold on. Who's that?
Can't wait. Well, I'm excited to tell y'all what happened to me.
Okay. So for related things, instead of having to track all your receipts and things to show where you travel to and from, you could just use the mileage rate. I use the mileage rate because I get more benefit from the mileage rate to do actual expenses. So I like that. Good job to the IRS. What's up, Price?
What's up, Price?
Hey, what's going on, peeps? How y'all doing?
Okay. We just covered some business preliminaries. So it says how the IRS mileage rate changes to reflect economic conditions. The economy of the United States is erroneously complex, composed of tens of thousands of businesses employing hundreds of millions of workers. The IRS must release much information about its internal workings and which department is responsible for adjustments to the cents per mile rate. Some businesses take credit for providing the data on which the IRS bases its decisions, but the process is ultimately a matter of accounting for interrelated microeconomic trends. Don't know which is
One is convertible at
decision to update the standard mileage rate each year, or what tips the scale in favor of a rate change. But
$20.
looking at the historical picture, the standard mileage rate increases when the economy is in a downturn, which can provide employees a subdued break in hard times. A slightly larger tax return can mean the difference between sovereignty and bankruptcy, which keeps the economy growing and making all the difference. And yet, when it comes to the brace tax, the IRS standard mileage rate mostly comes down to a few factors, such as the price of oil and gas. The source cited above claims that in 2022, for example, the rate was increased due to significantly higher fuel prices, which rose 49% for the regular gasoline and 55% for diesel fuel over 6 months ending June 30th, 2020, as well as the general increase in prices for both new and used vehicles from 2019 benchmark price. Let's examine the IRS recent history of the IRS. Let's examine the recent history of IRS mileage rate changes from the 1990s to now and see what that data bears out. And that's what we just looked at on the chart. In the 1990s, a decade of stability. The 1990s were a stable decade. It only looks that way in hindsight. After all, this is a decade ushered in by a recession, the fall of the Berlin Wall, the first Gulf War, and the collapse of the Soviet Union, not to mention the widespread adoption of a little thing called the internet. And look how that turned out. I like this information.
Like stock price.
Let me screen this.
We don't care how much the underlying price is right now.
But if you look at the IRS standard mileage rate, you'll barely notice all of this global unrevealed upheaval. The rate moved from a low of 29 cents in December 1994 to 32 cents in 2000, considering the standard mileage rate jumped up 8.5 cents from 2020 to today. A rise of 3 cents over a whole decade seems absurd. Why were the 90s stable from an IRS rate perspective? Why didn't the rate change during the 1990s? Despite the beginnings of the dot-com boom and burst and the Yugoslavian war, these are conditions that cause rate changes to happen in other decades, yet the needle doesn't move strongly in either direction in an entire decade in the 1990s. This table begins in 1994 after the U.S. economy fully recovered from the 1990 through 1991 global recession. However, if we look at an alternate source, we see that the IRS automobile rate didn't increase in the 1980s or early 1990s either, despite a global economic downturn. The simple answer to the questions above is that the IRS standards mileage rate doesn't change much because oil prices were remarkably stable over the 1980s and the 1990s. After the world energy crisis of the late 1970s, restrictions on the price of oil were eased, leading to an oversupply of products that lasted until the early 2000s. Interesting. The IRS rate change exceptions in the 1990s. History scholars will remember an oil shock in the 1990s due to Saddam Hussein invasion of Kuwait. The price of a barrel of oil doubled from July to October of 1990, which said to be responsible for the recession of the early 1990s. However, the U.S.-led military invasion
However,
quickly quickly
that's
flinched over the Iraq forces, and the Gulf War ended 6 months after it began. The IRS standard mileage rate remained the same in the 1990s because the conflict started in August and finished in February. The IRS typically makes rate changes in December and June, although rates have also been changed in the spring and fall. They sure do. So does Department of Labor.
made at 8:30 p.m.
The collapse of the Soviet Union and the rapid privatization of
Time
Eastern Europe and Russia led to a market boom. Instead, the U.S. Instead, economy of the U.S. and its allies continue their economic rally over the 1990s, and this positive outlook among policymakers and everyday business owners and workers is likely to be responsible for the lack of rate changes during the decade.
You said B as in boy?
In the 2000s, a transitional period. The economic decade of the 2000s begins with a bang with the European investment environment of the 1990s booming into what is now known as the dot-com bubble. Dot-com bubble and burst. You may recall from other articles that the IRS standard mileage rate tends to increase during difficult economic times and remain stable or even fall during economic booms. After the 1990s, when the IRS mobile bill rate only rose 2.5 cents, the standard mileage rate increased from 32.5 cents per mile in January 2000 to 36.5 cents in December 2002. This is a response to the bursting of the dot-com bubble. Consumers began to adopt the internet, and the investment possibilities this offered seemed endless at the time. We all know how that turned out. The Nasdaq stock index rose 500% from 1995 to 2000, then lost 75% of its value between March 2000 and October 2002. Many of these companies received large amounts of capital for investment, but needed a path to profitability, simply trading on the possibility of investor returns. This was a setup for a disastrous collapse. Indeed, as unemployment in the U.S. rose and consumer goods fell out of reach for many who gambled their savings on the promise of ease tech money, the IRS standard mileage rate rose 5 cents from the first quarter of 2000 to the last quarter of 2002.
I don't mind saying.
Mid-year 2005, IRS change. After decades of relatively stability, the IRS suddenly changed in 2005. The IRS made an exception to their usual December June announcement schedule, raising the schedule mileage rate by a whooping 8 points in 2000. September 2005. What caused this dramatic shift? The answer comes down to a single name, Katrina. Hurricane Katrina formed on August the 23rd, 2005, and dissipated by August 31st. The hurricane caused billions of dollars in damages through several states and claimed 1,800 lives. The problem for the rate was that Katrina directly hit the Gulf of Mexico, where most of the U.S. energy infrastructure is located. By September 1st, the New York Times reported on surging gas prices Stating that gas stations uplines were higher than ever since in the 1970s. Realized how the oil supply crisis would negatively affect businesses and consumers and moved to increase the rate that drivers could claim tax-free by September 9, 2005. After years of stability, a single storm disrupted the entire U.S. economy in under 20 days. This lends more credence to our hypothesis that gasoline and oil prices are the most crucial factors determining the IRS automobile allowance rates. The IRS dropped the standard mileage rate in 2006 back down to 44.5 points, showing that oil supply crisis caused by Katrina was temporary. However, the good times were never meant to last. The Great Recession, IRS rate changes in 2008. By now, everyone knows that the cause and effect of 2008 recession, often called the Great Recession, due to severity comparable only to the Great Depression of 1933. The initial economic damage was caused by an overvaluation of U.S. prices, buoyed by so-called subprime mortgages given to home buyers who wouldn't have met eligibility in previous years. Banks and financial spectators then purchased packages of these mortgages en masse and traded them like bonds, despite the fact they were more risky than either equities or bonds. The trade-in frenzy caused banks to give out even riskier mortgages because they could recoup their investment by trading these debt packages. We all now know now we all know how that turned out. As banks and mortgage lenders ran out of money, the IRS changed the standard mileage rate by 8 points in July 2008. While the recession only officially lasted 18 months in the United States, it damaged the entire global economy. The economic recovery did not occur until the mid 2010s. Similarly, we see the IRS standard mileage rate rise to a peak in Q3 of 2008 and gradually lower the economic crisis unwinds and unfolds. Right into the investment, right, Chris?
Huh?
I say this is the mileage. The I didn't even think about it that way, honestly.
I ain't either.
And it's right. Wow, I didn't even realize that those markets, and then they were just selling them like like the bad like bonds. That was an interesting discovery right there.
Mm-hmm.
Now we have some information in our arsenal. Okay, let's see. It says 2010 recovery and relatively stability. It says by midway through our first Obama presidency, the U.S. economy had recovered from the worst of the 2008 meltdown. In hindsight, the 2010s can be considered an uninterrupted bull market if you ignore two outer periods in 2011 and 2018. The standard mileage rate stays within 10 cents of 50 cents the entire decade, sometimes raising a point or two in response to a short-term oil price dip or hike, sometimes falling as many as 4 cents per mile in one announcement. We didn't know how good we had it until it was gone. The stability of our IRS mileage rate and relative recovery of the economy continued until December 2019. Hold on a second. The outliner 2011 IRS rate change. The most drastic IRS rate change during the 2010s happened in 2011 when the IRS raised raised the cents per mile reimbursement rate to 55.5 cents from 51 cents. The Cupid oil price strike was due to the war in Libya and events surrounding Arabia Spring. The slight disruption, oil supplies rocketed through the entire economy, causing the IRS to raise the rate dramatically in July of 2011. COVID era and IRS standard rate, 2020 to present day. Update fall 2023. The impact of COVID-19 shocked the world, although drastically financial measures by Western central banks and bottoming out of global interest rates inject life into the economy when it was needed most. It's cold comfort today to most, as inflation has driven up prices at the pump and the grocery store, as both rely on cheap fuel. U.S. households get hit while down as federal raises mortgages and debt interest rates to try to cool down overheating economy. COVID damaged global supply chains and caused a worldwide labor shortage. The Russia-Ukraine war that began in 2022 poured gasoline on the fire, causing the price of everything from used cars to Brussels sprouts to rise. Unsurprisingly, the IRS must set a new benchmark mileage rate of 65.5 cents per mile in January 2023. After all, the cost of driving keeps climbing higher. If these trends continue, we can expect further rate rises. However, there are some excellent reasons to be optimistic about the IRS rate for 2024 and beyond. What do you think? All right. So, some of this information is not new. We speak about it. We have spoken about it a lot when we're looking at the charts, especially when we do historical data analysis on a company, and we look left, meaning we look to previous years to see how a company equities have performed over time. And we often come to the conclusion of where those prices have dipped in the market, it was due to the dot-com era, the wars, COVID-19, and things of that nature. So as you can see, not only was the equity market affected or fluctuate in price. Oh, hold on. You can also see where the IRS standard mileage rate fluctuates as well. So, from what I gathered thus far, the rate changes for the mileage is not just contingent on the disruption in oil prices. It also has to do with world events as well. What do you think, Chris? So,
Yep.
Because remember, we always look at those charts. So,
It's probably
that's
gonna do. Like I think the rate change is gonna keep going because the economy is shifting. It's actually getting worse. So I guess as the things get more expensive, like the travel, um, as a business owner, they probably give you more leeway, as far as increasing the cent per mileage. I
uh,
say, give us $1, man. Bump it up to $1.
right. Right. And so you see right on it, it says predicting the future with the IRS car allowance rate change in 2024. It says inflationary spike is cooling, although central banks are still raising interest rates as of September 23. A rise in interest rates tends to put the brakes on the entire economy, although the effects can take years to manifest in the market fully. However, as we've discussed, the most critical factor concerning changes to the standard mileage rate continues to be oil prices. Until economies decarbonize, this is likely to be centralized and variable around which the IRS rates are set. Because interest rate hikes will inflict pain on consumers and businesses alike, the odds are possible for a recession in 2024. But this will reduce oil demand and should send global oil prices downwards. Fleet managers can expect a slight break on tax-free allowance payments. All things considered, it is likely that the IRS rate will remain roughly in line with what it is today, perhaps remain the same or rise slightly less than 2 cents. And it did. It actually is at 67 cents. It actually went up 2 cents. So it did change. So it was at 65. How to prepare for future IRS standard rate hikes. Sound businesses stance doesn't change with the times, but it is based on a few fundamentals. Buy low, sell high. Keep profits healthy and save for bad times doing good. If the global economy shows down and keeps prices in check, central banks may lower interest rates again, freeing up capital for investment. One way your business can protect itself against the IRS standard mileage rate changes is to limit your exposure to the rate. This can be accomplished by tracking actual miles, which has downsizes, or by switching to favor a new compensation model also sanctioned by the IRS. Oh, I never heard of that one. While favor programs still have some variable cents per mile payment components, they also incorporate a fixed rate that accounts for the depreciation of vehicles and other expenses not covered by a variable only cents per mile rate. I need to go look that up. So let me screenshot it so I don't forget. We're looking that up next because we got to get ahead of the
Play the damn game and curve for real.
right. The IRS rate has a long and complex history and is intimately tied to the economy and energy prices. Understanding the IRS rate can help your business prepare for the economic success now and in the future. All right, so let's go look up. Let's see. Let me see if they have it on here. We got to go look that up. The favor, FAVRO. That's a new way, a new compensation model. and it's sanctioned by the IRS. I'm about to look it up. Learn something new today, honey. Put that in your bank. Put that in your bank. Got to get ready because we don't want to get sidetracked, and we definitely don't want to get comfortable because it seems like things, like you kind of got a hand on, what's going on. Something always there's always something come slap you by the wayside and you knew nothing about it. All right, it stands for fixed and variable, as this method of reimbursement compensates employee car costs by determining the following: the fixed localized expenses such as depreciation, insurance, or registration, and variable expenses such as maintenance and gas. Okay, so this is for the companies that have the fleets. I wonder if it is. Well, we drive a car. I do know depreciation is a factor. So let me look this up in the IRS reg. Okay, I'm gonna go back to the top, but let me see if there's something in the IRS. I like to get it from there first and then work my way backwards. I see Investopedia. Okay, here we go. All right. So I'm gonna read the other site first till I get home and then I'll back do it. See how that works out. So we're talking about the mileage rates and how you can get prepared and take advantage of the mileage rates and based off of current affairs. All right, so the fixed and variable rate reimbursement guide. It say the favor reimbursement is a tax-free car allowance for your mobile workforce. The IRS compliant program, it lets companies reimburse mobile employees who use their personal vehicle for work. So this would be more like those people who come around doing solar panels, right? You have that's the most recent that come to mind. Those people who come around, I guess, doing the water filter thing, right? What you think about? These are more those individuals who may use their cars. You got counselors. Counselors, if they're in a company that doesn't have enough company cars, or maybe they could be using their personal cars. Who else? It's like those who work in behavioral health, they could possibly be using personal cars. So this could definitely work for them. It says a favor reimbursement is a tax-free allowance for your mobile workforce. It lets the company reimburse mobile employees who use their personal vehicle for work. So, in-home healthcare. In-home healthcare, definitely. They reimburse, they use this method because they go around traveling phlebotomists. Who else? A lot of those people who travel in the medical field, they have those traveling jobs. Who else have those jobs? Who else?
Well, I'm trying to catch me a traveling nurse. Lock her down.
Hey, they make them dollars.
Yeah, I'm trying to lock them down.
Yeah, they make them dollars. Yep, I have a couple cousins that do it.
For real?
Yeah, one of them live in Houston, but unfortunately, she favors her same gender, and she just got married in June.
Oh my God!
You would have liked her. She's a traveling phlebotomist, man. She go all over, but she have friends.
Yeah, we can always change her back.
You exchange it back. Yeah, she have a son. She has a son. Or whatever.
Man.
But yeah. She know she she like guys too, but she favor girls. So she got married. But anyways, to each his own, because it not me.
So
Um
so Mo, when they do the traveling nurse thing, right?
mhm,
Let's say let's say okay, they do traveling nurse and they do let's say in state or in city,
mhm.
or they go from county to county. Could that is that like the independent contractor?
Some of them get paid. Okay, so I have when I looked at my cousin's tax returns before,
Hmm.
one of her jobs, so they got a couple things going on because they got some incentive dollars too. So some of them will get a W-2, and they will have, depending on the state and the county, they go up to a certain dollar amount is taxable. Some of it is not, and they have these bonus incentives. So their W-2 has certain language on it. When you're filling in their tax returns, where, and then some people, depending on the company, you could be come in as an independent contractor. So what happens is it depends on the type of traveling nurse. The traveling nurses who go and do assessments and follow-ups set their own schedule. If they set their own schedule, they go in, do their job, and leave. They're independent contractors. If they go and they're a traveling nurse and they're stationary at a company and they go in, their hours is set by the company, then they are employees, but they're still travelers and they get paid differently from the local nurse. So,
Right.
for example, my cousin was in Carolina. Her aunt was a her aunt was a is a RN here in Lexington Hospital, and she was a traveling phlebotomist. She made more than her aunt because she was a traveler. She was under a different type of contract, and
Right.
she only worked 13 weeks. And she was trying to get her aunt to change her status and become a traveler because you would make more money. But
Hmm.
she wanted to stay a RN, and she was trying to show her how she could. I have ACX Monday at 12. What today is? I just tell them. All right. Um, so she was trying to explain to her, like, Auntie, why you doing that when you could do it like this? And your state, hey, you gotta put the garage up. Go put go. We don't. You do. No, we don't. So not go outside. Okay. And she was trying to explain to her aunt how she can make it happen. And her aunt, she didn't do it. She didn't change over. But I watched it and I really sat down and checked out how how it works and everything. And man, when she showed me, when I looked at her W-2s and how it was broken out, and they get per diem.
Mm. Yeah.
And they get per diem. So
Yep.
so that's the second part. You get so one of her buddies was a traveling nurse. She was in, I think, New Hampshire. So instead of her, what she did was she bought her the drivable mobile homes, the RVs that you drive.
Yeah.
She bought her one of those and she found her a place to park, where you park the mobile homes. And
Yeah.
so, and she had a Jeep, she pulled her Jeep behind it. And so she was so instead of paying that high rent to get an apartment and all that, use up all her
Yeah.
gym,
Yeah.
she bought her a mobile home, honey. And please, she ain't had no bills. She just paid lot rental fee.
Yeah. Yeah. I was smart.
Yep. Yep. That's how she was. Come on, let's go to the grocery store. Why you opening that? Hey, peanut head. Why you opening that if we need to go to the grocery store?
Because she.
Oh. All right. So yeah, so that's how I mean it is really easy. Then I had another buddy, she didn't do the sticking. Well, matter of fact, Shonda, she became an instructor. So she's pretty good at what she did for vitamins. She got trained to be an instructor, $100 an hour.
Wow. Wow.
So in that medical field, there's a lot of different um branches that you can money.
Right.
You know, one time she was delivering. She wasn't doing the sticking, but she would go and pick up the lab work and deliver it from one area to the next.
Mm-hmm.
Um,
Oh,
so so the mileage thing works, and she acted as an independent contractor because she set her own schedule. So the number one deal is, do you set your own schedule or not?
right.
Yeah.
That's, yeah, that's dope. Dope.
Yeah. So I definitely want to build off of this mileage thing. I'm gonna keep that. See if somebody's let me see if anybody in the chat have any question because I just been going on and on and on.
Yeah, you that.
I wasn't worried about nobody, wasn't listening to nobody.
I think you ran price off.
I did. You think so? Ain't nobody in the chat. Peace, power, and profit, you guys. So I hope you kind of learned something, whatnot. So what with the Jerome Powell?
What about
Any recaps?
him? Basically, man, he basically was saying that, they're not gonna wait for inflation to get down to 2% to start cutting rates
Mm-hmm.
because they feel like it's never gonna get there, basically. I think he's come to the reality that him and the FOMC come to the reality that 2% inflation is not going to happen. So they're planning to see when and where they're going to cut rates, but it's not going to be waiting to 2%. So they're talking about September possibly, for the first rate cut, but we'll see. And again, inflation might go back up.
Mm-hmm.
So, and the only reason why it's been going down is because oil prices been going down. So,
Right.
But man, I use Cash App Boost and Acorns for the same transaction. So
Mm-hmm.
I save money and then I invested money at the same time.
Mm.
Not only that, when you get the $9 membership, which I don't pay $9. I don't pay anything. I got free membership basically. You get matching on your earned found money. So
Mm.
yep. So let's say let's say the earned found money is like you get 3% invested. Well, Acorns will match your 3% with another 3%. And so let's say you'll get 6%.
Mm.
And then yeah,
You gonna find them deals now.
yeah. And then with the Cash App Boost, so you can shop at certain places, and they'll give you 3% here, 4%, 5%, 6%. So I shopped at eBay and I got 4% off, which the maximum discount was $5. But if you did 4% on a $300 transaction, that would have been a big discount. But I take the $5 off and then turn around, and use that Chrome extension or the Acorns Found Money and get that money invested. Win-win. So, and then I just found out too that Acorns is doing a 3% IRA match on new contributions to your Acorns Later retirement account. So I'm going to activate that on my account, which I don't pay a membership for. Want to know how I got the free membership?
Yep.
I just deposit, $250 a month. And they waive the fee.
Well, I'm almost at that.
Huh?
I'm almost at that. I just had to add another 50.
But that's how you get the fee waived. And I'll probably never pay another Acorns membership fee again.
Yeah. I'll write it off.
Yeah, of course. You can always write that off. But yeah, man, just looking at, certain things and talking to people, man, people don't even got a retirement account, much less a investment account. They don't even got a retirement account.
I think they think retirement account is only for people who work or people who are executives.
Right. For executives, right. Oh, and that's what I wanted to go over too, Mo. This idea that entrepreneurs are millionaires, or they make up the most millionaires. And no, it's 9 to 5 people. 9 to 5 people. I wanted to, go over that article.
Yeah, that would be a good job. Stuff, but you got to reput up your home.
Huh?
You could go over the article. You want to read it, or you wanted me to share it on the screen?
Yeah, I'm gonna let you pull it up on the screen. I'm gonna send you the link.
Wait a minute. I have to I ain't gonna be able to read it though. You're gonna have to read it because I have to go in the grocery store real quick.
Yeah, I'm gonna read it.
All right. What you gonna put it in the Zoom link?
Yeah, I'll put it in the Zoom chat.
Where the heck is my keys in?
Grab it real quick. Let me get that. I'm gonna have to read this article too. I'm gonna do a video on that by myself.
Yeah, when you do the what is that? Yeah, fine.
All right, let me get this article. I was talking about that that damn handbag. Oh, here we go. The National Study of Millionaires.
Let me know when you put it in the back.
I'm doing it right now, Mo. Oh,
Okay.
shit. Oh, can you grab it from the messenger chat?
Yeah, I can get it.
Yeah, okay. Let me just do that.
Hold on. Apples and oranges. Somebody get it from the Mexican desk. I see it.
All right.
These. Yep. There's some apples. See? Yes. All right, Chris, I'm gonna bring it up and go on mute, all right? Let me know when you can see it.
All right.
Wait, Chris, you should better see it now.
Yeah, I can see it.
All right.
All right.
All right.
I'm gonna go over a summary real quick. All right, study summary. Ramsey Solutions conducted the largest survey of millionaires ever with 10,000 participants. 8 out of 10 millionaires invested in their company's 401k plan. The top 5 careers for millionaires include engineer, accountant, teacher, management, and attorney. 79% of millionaires did not receive any inheritance at all from their parents or other family members.
I know, I heard later.
Okay. It says that the American dream is alive. America may be called the land of opportunity, but few Americans today really believe they have what it takes to become wealthy. They've fallen for the myth that in order to be a millionaire, they need a big income or a rich family. But the National Study of Millionaires by Ramsey Solutions proves that these beliefs about how millionaires got their money are wrong, flat wrong. So, how did all of these people hit the $1 million mark? Most of them did it through consistent investing, avoiding debt like the plague, and smart spending. No lottery tickets, no inheritances, no six-figure incomes. Really. That's great news for Americans who've lost hope that they can ever build real wealth in their lifetime. How millionaires invest? Hold on, let me hit this last point again. So how did all of these people hit the $1 million mark? Most of them did it through consistent investing, avoiding debt like the plague, and smart spending. No lottery tickets, no inheritances, no six-figure incomes. Really. That point needs to be, it should be an echo behind that. That's great news for Americans who've lost hope that they can never build real wealth in their lifetime. How millionaires invest and spend. According to the survey, 8 out of 10 millionaires invested in their company's 401k plan, and that simple step was a key to their financial success. Not only that, but 3 out of the 4 of those surveyed also invested outside of company plans. So you can invest into a Roth IRA, a traditional IRA, outside of your company's 401k plan. But they didn't risk their money on single stock investments or an opportunity they couldn't pass up. So no FOMO involved. But FOMO is fear of missing out. In fact, no millionaire in the study said single stock investing was a big factor in their financial success. Single stocks didn't even make the top 3 list of factors for reaching their net worth. 3 out of 4 millionaires, 75%, said that regular, consistent investing over a long period of time is the reason for their success. So the story about the young computer genius who developed an app that earned millions overnight is the exception, not the rule. Even when millionaires don't have to worry about money anymore, they're still careful about their spending. 94% of the people studied said they live on less than what they make, on less than they make, and nearly three-quarters of the millionaires have never carried a credit card balance in their lives. These millionaires also said they spend $200 or less each month at restaurants. And 93% of millionaires use coupons all or some of the time when shopping. God damn it. Do you see what I'm talking about here? That's why I try to buy less than retail or buy, whatever. If I don't give a damn if it's a fucking drink. I'm trying to get that shit less than retail. The shit already high in the first place. So I'm trying to get it cheaper than what it actually costs. So yes, we couponing, we discount code getting, uh, so forth and so on. When I become a fucking millionaire, I don't want to hear nothing. I don't want, oh man, hey man, you should have told me. No, I don't want to hear that. I did. So moving on. Um, by staying out of debt and watching expenses, they're able to build their bank accounts instead of trying to get out of a financial hole every month. Millionaires are made, not born. Despite what society might believe, only a small number of wealthy people inherited their money. The overwhelming majority, 79% of millionaires in the US did not receive any inheritance at all from their parents or other family members. While 1 in 5 millionaires, 21%, received some inheritance, only 3% received an inheritance of $1 million or more. In fact, the majority of millionaires didn't even grow up around a lot of money. According to the survey, 8 out of 10 millionaires come from families at, at or below middle income level. Only 2% of millionaires surveyed said they came from an upper income family. Millionaires don't always make big bucks. The next logical question is, what kind of salaries do wealthy people make? Not as much as you might think. The majority of millionaires in this survey didn't have high level, high salary jobs. In fact, only 15% of millionaires were in senior leadership roles, such as vice president or C suite roles, CEO, CFO, COO, and so on. 93% of millionaires said they got their wealth because they worked hard, not because they had big salaries. Only 31% averaged $100,000 a year over the course of their career, and 1/3 never made six figures in any single working year of their career. Millionaires go to college, but not to elite schools. The national study of millionaires showed that it's the degree itself that matters, not where the degree comes from. Almost 2/3 of millionaires, 62%, graduated from public state schools, while only 8% went to a prestigious private school, but the bulk of millionaires did get that piece of paper. 88% of millionaires graduated from college, compared to 38% of the general population, and over half, 52% of the millionaires in the study earned a master's or doctoral degree, compared to 13% of the general population. Perception versus reality. Overall, the national study of millionaires showed a dramatic difference between how Americans think wealthy people get their money and how they actually earn and spend their money. The majority of the millionaires in the study said they earned their money through long-term investing. When it comes to spending, millionaires used a common tool for saving money, a shopping list. According to responses, 85% of participants in the national study of millionaires rely on a grocery list to some degree. About the study. The National Study of Millionaires is a research study conducted by Ramsey Solutions, with over 10,000 U.S. millionaires to gain an understanding of personal finance behaviors and attitudes that factor into their financial success. The nationally representative sample was fielded November 17th, 2017 to January 31st, 2018, using a third-party research panel and our Ramsey Solutions research panel. It is the largest, most statistically significant research project of its kind ever conducted. All right, so that's the gist of it. It's a short article, even though I think you can go. Let me see what this is on my screen. Oh, that's nothing. So, I mean, it's 99% behavior, man, on how to even become wealthy. Uh, yes, you can make a big salary and, get there as well. Or you can just make a middle class or middle income salary, invest, save, budget, and all that good stuff. And, keep your debt and expenses in control or low, I should say. It's pretty simple. Um, the idea itself is simple, but it's about controlling your emotions, your behaviors. Yes, you can yes, you can go, take a vacation or, buy an item that you wanted, but it's about putting that money away for that specific thing and, not getting off your routine or what's, important, like your personal economy. You know, every paycheck, it should be going 401k, Roth, IRA, traditional IRA, 403b, uh, Keogh plan, or, whatever, retirement plan that you have, um, you know, that should be automatic. That's automatically going to come out every time. It should not be, a question. Well, I can move, I can, put a little bit less in my 401k or such and such so I can get this. Don't think like that. All of that should be automatic. No change. You decide what percentage that you want to put into your retirement account for your retirement, and you move it on. Uh, and making sure that your lifestyle is not luxury right now. Like I said, if you make six figures and you have no kids, you can do a lot more spending or a lot more luxury stuff and still put away money for the future. But if you're not doing that and you got other responsibilities, you need to make sure that your future, is taken care of, and then you take care of everything else. So they have the rule, where there's a certain percentage that you put towards your expenses. It's an income statement. You know, make you an income statement, make you a balance sheet to know what you need to pay, how much you're paying every month, what money is going where. This shit is no reason that you shouldn't be able to do this. It's staying accountable. Mo was talking about it earlier, doing your taxes if you have a business, keeping your stuff in order, writing stuff down, keeping receipts, or, getting these different programs and applications, that kind of do this stuff for you, to keep you accountable. So when it's time to file your taxes, you got all your paperwork in order. You ain't got to run over here, run over there, try to find stuff. No, it's already in order. You've been keeping it together all year long. It's the same thing with your personal economy. Um, when you're dealing with personal finance. So, you got a rent or a mortgage, you got a light bill, you got car note, you got insurance, so forth and so on. You know, write that stuff down, have a balance sheet, be accountable to that, you know, set a certain percentage of your income that goes directly to your future, whether it's 401k, Roth IRA. Me personally, I have all three. I have a Roth IRA, I have a 401k, and I have a traditional uh, IRA. And I have a certain percentage and I have an emergency savings, and I have a percentage of my earnings or my income going directly to that. I can starve myself from certain things. There's other ways I can make money to, buy a luxury item, but I make sure that is set first. It's automatic. There's no changing it. It's set in stone. So I got 10% going here, to my 401k. I got 10% going to my IRA, both my IRAs. I got 18% going to my emergency savings. And then everything else, it goes to my expenses. Or, I got some little cash over here, that I can buy if I want to buy me a pair of shoes or whatever the case is. But that's the behavior that you have to have if you want to be a millionaire. For one, stop believing what social media says. That's a mistake. These entrepreneurs, these people online, they're not millionaires. And the idea that you think that entrepreneurs makes up, the majority of millionaires is wrong. Yes, you can have your own business, but do you know how much you have to gross and profit on top of, the losses, your margins and all of that to net $1 million? You have to do a lot of business, a lot of service to even do that. And let's say you had employees. This ties right back to what Mo was talking about earlier with LLCs and sole proprietorships and S corps, C corps, and so forth and so on. Then you have to pay your employees, so you still have to be able to net $1 million after that to put yourself in that basket. And people don't get it twisted. Being an entrepreneur is not easy at all. You have to pay. You have to pay to play. But the whole thing behind it is behavior. You have to change your behavior. You have to change your thinking about money. This is why most people will never be millionaires. They want it, they dream of it. You know what I'm saying? Most people do. But it's the actual behaviors, the action behind it that gets you there. You got to have a plan. We come on here every year, and every year the education that we give y'all is becoming more and more sharp, more and more detailed, for you to better your future. We're not asking people to become, financial whizzes or, to become a financial advisor like me. You don't have to be a financial advisor to do this stuff. No, you just, whatever money you make, put it to work. Do your income sheet, do your balance sheet, find out where you can, take some opportunity to invest in your future. Investing in your future is mandatory, especially if you have kids. It's mandatory. There is no question about it. So yes, things are a bit more expensive. Well, the natural behavior for a consumer is to pull back a little bit. Well, I don't really need that 12 pack of Coke. You may used to get it every week, but now you get it every 2 weeks because it's getting expensive. You know how to move and shake when it comes to that. You got to do the same thing with your future. So yes, these are real facts. That is not the only article that has somebody has done or where the information lined up. There's many articles telling you what people do, how millionaires become to be. Some inherit it. Some people are CEOs. Those are given. But a lot of them, built that shit out the mud because they chose, excuse me, to control their behavior with money and invest it. And like he said, he was talking about single stocks. I would never recommend single stocks. It's too much risk involved. That's why they say to diversify, ETFs, index funds, mutual funds. These are ways that you can invest, and diversify, get dividends, and so forth and so on. So, it's a real thing. It's really a real thing. And when I become a millionaire, I am going to scream loud and I'm going to show documentation. Look at
I'm
this shit. Look at it, baby. And I'm gonna
And you
say,
know what? And there's no going to be no shortcuts to it's slow and steady.
yep, no shortcuts, slow and steady.
Thing. Yep.
Because even when you do it like that, you got a solid foundation. You got,
Yep.
you got steps that you done built. So, even if you slip a little bit, you done built them steps so wide and so solid, you can just get right back home.
Yep.
That's
Yeah.
what.
You know what?
Uh-huh.
What I call it is you'll know your historical trends when you're high, when you're low. Because
Yeah.
when I was let me make sure I'm not sharing. When at some point I realized like when I'm on the uprise, like when I'm on the uptrend with finances and things are flowing a certain way. And then I like my peak seasons and my low seasons, I got a grift on. So like if I notice things are going steady, not moving really fast, things of that nature. Hold on. Zion 50. Um, I will uh I'll have a certain one. That's why I have more than one investment account. I have a certain one that when I have to get at a steady or maybe looks like things might be slowing down and unforeseen. Like for example, last night I pulled in my garage and I just knew I was in the garage properly. I checked it, and when I let the garage down, I wasn't in all the way, and I couldn't believe it. But by the time I tried to bag up, I had already the door was stuck, and I popped the. So you know what? And I was so upset because I have a thing about leaving my truck outside. So of course I called the garage company, $2,300 bill, right? Unforeseen. Oh, I was hot because I got to go to Vegas next week too. I was mad because that cut into my little cash, right? It cut
Right.
into so I had to take my little side piece investment account and I had to give it up
Yeah.
because I had to fix my home. And I've learned before with my homeowners insurance that if it's not like a catastrophe or anything, they give you a hard time on doing that type of dwelling fix. So I just went on and just did it out of pocket. But I had that emergency fund sitting over there, just waiting. I was getting ready because I hadn't used it yet. I was getting ready to go and have a little bit of it in Vegas, but that won't happen.
Yeah.
Not from that account. It stopped at 14. Oh, take it out and do it again. So do
See?
But but I was good because so my friend was like, "Well, at least you had it to spend." I said, "Yeah," because I was not waiting. I wanted my stuff fixed last night, and I didn't wait. I got
Right.
it fixed, But I was able to do that because I had that extra, emergency investment account sitting over there, that I had made money in, and I said, "Well, shoot, I'll just sell this stocks over here." And then I'll get my money out and I'll pay for
Right.
my garage. So
Right.
those little things. But I learned that, I mean, probably if I had not started picking up these little extra places to hide money, well, I call it hiding money, investment accounts, I would have had to come out of cash. And if you come
Hmm?
out of cash out of your bank accounts, if you take that money, those are the dollars that you have probably put away for regular bills and things of that nature, and then something else would have been lacking, and then what's the saying, I'd have been robbing this person to pay that person,
Yeah.
this, that, whatever. So because I had put that emergency aside, boy, I was mad because I didn't save that money for that, but I was like, whew, okay, so
Right.
now I have to do I have to go back and check my insurance policy, my home insurance policy, and see, and refresh myself on what it covers and what it don't covers. And then now I have to have a home repair account.
Yep.
I don't want my emergency funds covering home repairs. Home repairs are more expensive. I want my emergency funds to cover things like if I had to. You you like my card?
Oh, sit down.
Oh
It's a
no.
chip is locked.
Give it out, unlock it online. Don't worry about it. Come on. You're saying, because if you once you get a habit of putting something away, it becomes super easy for you to create a pattern of behavior with it. And if you start, y'all know I started with the extra stuff. I started real small, 5, 10, took taking the $20. You know what gets me, Chris and Brandon? What's up, Brandon? I forgot to greet Brandon.
What's up,
What's up,
Brandon?
Brandon?
What's up, guys? How y'all doing?
I'm
Good.
good. You know what gives me about a circle of friends is that you have all of these opportunity in these companies to invite somebody to get $20, $50, $75. And your circle of friends, although they don't have any investment account, will not hit the damn subscription button.
Nope. Not at
And
all.
and for the life of me, like, you know what? That's why I separate from y'all. Because, you could change your economic situation, even if you didn't put another dime in that account. I looked at my M1 account today, y'all. I was impressed. I got that M1 account when Chris told us to get that M1 account, and I only had put that little $100 in that M1 account. And my M1 account is up. Um, it is up $84. Almost double. So my M1 account is up altogether. No, it's up 28.97%.
Hmm?
So that's just money just sitting over there just in case. So I was like, oh, my M1 account always do good. And I'm just halfway through the year. So I say, oh, I'm about to shift. I'm about to look at, where maybe I have something else going, and I need to shift it over here to this M1 because I have just ETFs in that M1 account. I got the Schwab large cap. I got the VOT ETF, and I got the VBK, the Vanguard mid cap, and the Vanguard small cap ETF. And that Schwab large cap is in that account is 32%, up 32% for the year.
Nice.
So I'm about to take and that's how I figure out which ones his account.
is I'll look and see what my M1 account is doing. So yeah, so I'm glad you brought that up in reference to, you have to start somewhere, you have to do something, because if you don't rock steady, then you're going to mess around and find yourself in situations. And we are starting to see it um more and more now because of the everything increased. So before the pandemic, it was safe to say that you could still get by with a $10, $12 an hour type of job because rent. Not you, Brandon. We know not you, and probably not even Chris. This is for the people in the rural areas or the smaller spaces, smaller cities. $500, $600 apartments. But shoot, now 1 bedroom now. Me and my friends talking about it. $1,600. Man, there's no way. Listen, I was telling somebody today, hey, you ain't the only person struggling. There is no way people are not struggling. If 1 bedroom is 1,600, that means 3 and 4 bedrooms. Man, what? Y'all beyond struggling.
Mm-hmm.
The strip clubs might be hot. Everybody on the pole. Grandma, great grandma.
Yeah.
You said what, bro? You said the strip club might be
Everybody
turned.
on the pole, boy. That's tough. Dang.
Everybody on the pole, bro. Great grandma, grandma, and the daughter. And the grandbaby too. So the
Oh,
teen,
that's
Come
because
on.
I know that pole stink.
look, you talking about highway robbery. Listen, I look at my mortgage all the time, y'all. I promise, I got my house in 2007, and I wanted to sell a few times. And I think about the mortgage rates that people got right now. I was like, I ain't going nowhere. I don't care how people talk about. I don't care. They be like, "Oh, your house so small." I don't care. I would rather pay what I'm paying now than to go pay 3,000. Sorry, I'm not doing it.
Man,
Let me put me a housing repair. Look, let me get me a housing repair, fund or whatnot. Because no sir. Mm-mm.
boy.
Can't do it.
I was gonna add one more factor to what Chris was talking about, as far as investing and saving. Another key component a lot of people are missing out on is compound, and then multiplying
Yes.
that compound. So I figured like that's another thing that they've been hiding from us. They say rainy day.
You breaking up a little bit.
You know, I'll take this off there real quick. How about that, guy?
Yeah.
Mm-hmm.
Mm-hmm.
I was gonna say, the old analogy was save for a rainy day, and when you save for a rainy day, you're not realizing that your dollar's being devalued. So basically, half of that money that you saved up is gone, and then all of a sudden they slipped in, oh, you got to invest. Okay, well they tell you that part, but you still don't know what to invest in. And a lot of people are throwing out there, if you want to invest easily, just do it in ETFs or index funds or mutual funds and set it and forget it, right? Well, the component I'm throwing
Mm-hmm.
in is compounding. You have to compound your money. That means you have to put more into it. And then another thing I want to throw in there, you have to double it every time. So instead of buying one ETF, buy two. Instead of buying two ETFs, you can buy five. Instead of five, you can buy 13 and just compounding that same thing. A lot of people don't know that you can buy more than one ETF. And I'm not talking about like the actual, you could buy one ETF multiple times, like almost like
Right.
stocks, almost in that sense. So
Right.
instead of buying one share, oh, that's what I meant to say, shares. You can buy more than one share of an ETF. And that's what, a lot of people just don't understand that aspect of investing. And that's one thing about, saving money really honed it in on me on like, and like and then trying to incorporate that investment piece. And like I'm really big into my Roth IRA right now. It's like, all right, how can I double my money? Okay, I got the stock aspect of it. Okay, now I got the option aspect of it. All right, let me go ahead and mess around with these mutual funds and see what I can do. And lo and behold, I can buy more than one index fund. I can buy more than one mutual fund. You know, you know what? Let me encompass options and mutual funds at the same time. Majority of mutual funds are going up to the left already, or up and to the right already, right?
Yep.
If you jump out your warehouse and you start learning different things and different vehicles within the investing realm, you can double your money. But like first learn the basics. Learn how to save. And I know Chris gave a good an example of a percentage. If a percentage is hard for you, do a dollar amount. Take a dollar amount out of your paycheck that you feel comfortable with, that you don't feel like you're gonna miss it. Like $50, that you can take $50, put in 4 different accounts, split that up, and that be your savings for that year. You can go ahead and do that. You don't have to make it complicated. If you feel like you want to do $100, go ahead and do $100. But I would implore anybody to save or invest, do more than like $50. Because depending on what age you're at right now, you need to kick this thing off a little bit. And then if you're younger, you can start a little bit lower. But if you're like 40 and up, you need to at least put $100 into your savings every
So,
every pay period. Like,
yeah.
oh, I can't do every pay period. I can only do once a month. Well, you got to make some sacrifices. What Chris said, yo, you can't buy that can of Coke. Don't even buy it that month. Drink some water.
Say that again.
Yeah,
You
buddy.
better say that again.
Yeah, it's healthier in anyway.
Oh, look, split it in half. Hey, do every other day drinking it versus every day.
Right. Drink sips of it. Get
You
you
better
one
buy
big
one
liter.
can instead of a 12-pack.
Right.
Mm-hmm.
Oh no, they got a deal. Oh, forget the deal. Just
Right.
get a
Yep.
can.
Yeah, I can guess right now. Right now, how many of you guys think that your friends are on Amazon Prime right now buying stuff?
Yep. I'm about to buy me some. Yeah, I
Hey,
need a wallet.
I'm subscribed, so I ain't buying nothing.
But not not a lot of investors or not a lot of people who save and not investing don't understand that this Amazon Prime thing actually reflects the actual stock itself.
Yep.
Mm-hmm.
Oh. Hey,
And it's somewhat of a caveat too, because it only happens once every year, right? So this is Amazon's Christmas, basically.
Yep. I don't even have Amazon Prime now. I'm using somebody else.
now make sure the front door locked. Yeah. Y'all
I mean,
seen
free, but
y'all
free.
seen Netflix cancel their lowest subscription?
The $6.99 tier.
I
Yeah,
guess. Yeah.
it's
Yep.
stupid. It's stupid. I'm shorting they stock tomorrow.
Yep.
Shorting them tomorrow. Yep, sure is. When they
Yeah.
got earnings, I'm finna short that shit tomorrow, boy. I'm telling you.
Go ahead, Brandon. I just want to throw it in.
No, that's pretty much it. I mean, but like it's just that compass of if you save, then you jump into the wheelhouse of all right, understanding investing and then understanding compounding, and then like all this stuff happens over time. It's not going to happen in one go, but it's a fascinating thing what your brain can do with like an hour a day, just sitting and focusing on saving, investing, and compounding. You can come up with multiple strategies, and that's what I've been trying to preach and trying to implore. Like Chris said, like what? How many millionaires have a degree? Well, 83% of them have degrees, not necessarily from like a prestigious type of school.
Yeah, it was something like
Right. I mean, like how many millionaires don't have a degree? That's probably less than whatever, or that less than what 2%. But it's the aspect of you learning. You have to learn this. And honestly, this is the funnest thing I ever learned because me learning this stuff has a potentiality of me getting the bag at the end of the day. I love it. If I'm steady learning the markets, I'm steady learning different things. I don't know if I told you guys, I was going to tell you, Chris, I was going to put it in the chat. Tasty Trade has a conference that's going to be in Houston. I don't know if you're in Houston or Dallas, but they're coming down there in, I want to say in August.
Yeah.
If you can't go to that, it's going to be, it was a dope conference. They give you different ideas, perceptions on options, how to play options. It's
Yeah.
basically the beginner thing, but I'm sizing off the guy who did Thinkorswim. Is going to be there, and he's going to break down a whole portfolio for you of how he actually runs his portfolios in a way. And I think he said this in Chicago. He said he has 4 or 5 portfolios like this, all funded with like $250,000.
Nice.
Now, I'm not trying to do that. I'm just trying to take a little tidbit of what he knows and try to incorporate it with what I got going on right now.
Right.
I'm not trying to, have 4 or 5 portfolios that, have like over 25 stocks, bonds, options, and then have a cash set on the side. I'm not trying to do that. I'm just trying to take little bits of what he knows already, incorporate what I have. And that's the whole aspect of, learning.
Yeah. Hey,
Trying to,
yeah, I uploaded one of the events they had dealing with that, but yeah, I do need to look at that calendar because I remember the last time I was
yeah,
looking
that's it
at,
right there.
they had one for Houston, but yeah, I'm gonna try to go to that one. I'm gonna try to go.
You know what? It's free 99.
Yes, sir. Yes, sir. We love that. Man, I ain't even checked my Tasty Trade account in a minute too.
Yeah, I gotta check mine too. But yeah, it's yeah, no, it's in Dallas. Okay.
Oh, okay, yeah. I'm in Houston, so I'll go when they come back here. I know they was here probably it was sometime earlier this year or something like that, I think.
Okay. But no, yeah, man, I've been quiet. I've been over here strategizing. I've been trying to find the different ways to um increase my portfolio, percentage.
Yep.
Um I've been looking at different events. I told you why I text you the data thing,
Yeah,
the data
yeah.
centers.
Hmm.
I think that's gonna be big as hell. I think that might even be bigger than, you know, the AI chips. Trying to
Definitely.
find what company is gonna have this data center.
Yeah, yeah.
So
I, I can agree with that. Yeah. Man, that's why I said, man, listen, you know, my shit automatically comes out. I ain't touching it. I barely even look at it. But my Acorn shit, I'm definitely looking now because I got this email today about them matching 3% on the IRA. And I'm about to activate that. I'm already getting matched at my job anyway on my 401k. So I just, and those are set portfolios already.
right,
Those are not managed. Those are managed already. You can create your own portfolio, like Brandon said, and you can do 40% or you can do $50, for let's say even your personal portfolio. You can do $50 in there and then $50 in an IRA. As long as you can afford it, and you got it planned out, don't be changing your shit, man. Pick a dollar amount, pick a percentage, and stick with it. Don't be overzealous. Do something that you can afford. You know what I'm saying? If you iffy, oh man, I'm gonna do 100 and just start jumping the gun because you're too excited. No, you gotta be rational. You gotta be rational. That's why I say make an income statement, make a balance sheet. See what you have to spend on your bills first. Then everything else comes out. I can put 10% here, I can put $100 over here. And you make that decision and you can stick with that, and your behavior is consistent with that. Don't change. If you can add a little more, do that. But make a plan for something. Don't be overzealous, and you should be good. Just get into a routine.
And then again, just to piggyback what you said,
Yeah.
you guys can have more than one Roth IRA accounts.
As long as you don't go over 7,000.
Right. Like you don't have to stick with your job's 401k. 401k.
And I would
If
I
any,
would advise that they do, because 401ks make people millionaires. But yes, you do not have to do a 401k at your job, especially if
right.
it's up. So,
I mean, shit. I mean, the smarter investor would utilize that 401k at their job, and if it was me, I'll take a piece of that out and then start another Roth IRA with a different company, and then use that money that I took out of my original 401k and start investing through that way. While my 401k with my job still takes a little hit, while the other Roth IRA that I have is starting to make money for myself. So now you have two vehicles that are producing income for you versus
Especially
that.
Yeah, especially if your company you've already reached the max of what your company is going to contribute.
Right. You can do a certain dollar amount out of that 401k. And, depending on what the dollar amount is, you got to add, what is that, like 25%? Or is it 10% taken out of your 401k now?
Oh,
I
you
forgot.
said if you take something out, 10?
It's 10%? Okay.
Let's see. Let's look it up.
You can add that 10% into the actual 401k. So if you take 1,000 out, 10% of 1,000, was that $10?
Yeah. There it is. Yeah, 10%.
10% of whatever, yeah, whatever 10% is of
Oh,
1,000 out.
let them take it. They ain't a lot.
Mo, you can get this too. My bad. The 3% match, you can get that too. On the Acorns. That I just seen.
There you go, Brandon. I was trying to bring it up.
Yeah. Okay, yeah, the penalty 10%. So again, like this is what investing trading is for me. It's all about strategizing to grow that account, to make yourself bigger. That's another key piece I don't think they're talking about. They're saying all people becoming millionaires through the Roth IRA or 401ks, but they're not getting to the meat and bones to it. They just say, oh, they're becoming. Well, how? Well, investing. Okay, what are they investing? Mutual funds. Okay, how are they utilizing mutual funds? Are they doing dividends? Are they doing
Well,
options?
mutual funds do have dividends. Options are not a part of mutual funds. It's
Well, you
strictly ETFs and index funds.
what far
Because
as the mutual funds?
yes, because they stay within the parameters of risk and reward.
Mm-hmm.
And you gotta understand too, with mutual funds, you do pay a fee. So you pay sales charges.
With an equity ratio?
Huh?
Was that the equity ratio?
Expense
Ratio.
yeah. So they're heavily diversified. So it's all types of different funds. And they're redeemable securities. So You don't trade with investors. It's you and the issuer of the mutual fund. It's not. It's not in the secondary market or what's considered the regular market that we normally trade in. It's between you and the issuer. So it's like a primary market offering. It don't have the same risk as, you know, a closed-ended fund would be. So this is why they said that, because it is heavily diversified. That's the most important thing, to be diversified. And you can purchase as many shares as you want. And then, like I said, you get paid, I think, 3 or 4 different ways: capital gains, capital appreciation or growth, and dividends. So, you know, I'm actually going to think about doing a mutual fund once I, you know, get myself in order to do it. But, you know, options, that's a little bit more advanced. That's trading. Trading.
Who you talking to, Chris?
I'm just saying in general.
Oh, I thought somebody was saying something.
Huh? What the hell? Oh, you sleep?
No, it's because the way you
Well, no,
said it,
because
I'm
Brandon.
like, is he talking to somebody?
No, because
No,
Brandon was talking about mutual funds and options. I'm saying options would be good once the person becomes advanced. I wouldn't recommend options because you can lose money. But if once they become advanced and they become learned, you can start making hella money on both ends. What she said, which I agree with. You know, I think everybody should do both, but everybody gotta have the capability to do both. I'm just strictly talking about investing. Even if it's a leap option, that's a little bit more, reserved or conservative. You know what I'm saying? Because Brandon do the leap options. We don't all did leap options, right? So, that would probably be a first step for somebody new. Just learning about options and doing like a leap.
I thought Brandon was saying, once you get multiple 401ks, and then, like, let's say you started with like $20 a month. Well, the next time do $40 and then $80 and then 160, like double it up so that you can see, not only can you see the compound interest work, but you can also see it grow more by doubling your deposit.
No, I'm that too, but like options as well too.
Oh, okay.
So you can buy more than like it shares almost, but far as like mutual funds.
Right.
But
So
no,
all
yeah, Chris,
inclusive.
right.
No,
So
I didn't. Mo, I didn't disagree with Brandon. I was agreeing with him.
Right. I just wanted to add that little part back in. I'm on the bus.
Let's see. 'Cause and Chris, I think you are right about the mutual funds. I'm just double checking because I had this article out and it said you can definitely trade options on a mutual fund. I was like, I know index funds for sure. Uh, ETFs too.
Well, the reason why I said you couldn't because is the fund is managed, so you're not the one doing the trading anyway
Right.
or investing. You're just buying shares.
Right.
So maybe like a closed-end fund, which is still a mutual fund. Those are negotiable securities, so they trade, in the secondary market where we trade at. A regular open-ended mutual fund is like a redeemable, so it's between the person, investor, and the issuer. So it's like a primary market offer.
Okay.
Brandon,
Okay.
he's showing off. Brandon, he's showing off.
Man, no, hell no, let him show
You
off. I mean,
hear
he
him?
been
You
working
hear
at it,
him?
man. Yeah, I
Hey,
hear it. I
Chris
hear
is
it.
killing it.
Motherfucker
You
done check
better
me.
work. You
Well,
better
yeah.
work.
Well, he done check me, boy. All right, well, I see you, boy.
He's showing off.
Hey, I love it. Go on, show off. Show out.
He kicking
Man,
butt.
no, I ain't messing with Mo. Mo like McKee. So you go to McKee. Said that's who you like?
I sure will. I sure will. Girl power, damn it. Girl power.
That girl mad at me, man.
What you
What
do?
you done, what you done done?
No, so I'm in her Telegram group, right? And it's something called Chat Social now that you can use that people be using now. And I was like, she was like, she had 2 invite codes left. Or it's called Chatter Social. And she's like, she got 2 invites left. And I said, I'll take one. She ain't even send me the fucking link, bro.
Oh
Mm,
damn.
mm.
I was like, damn, that's fucked up, man. All because I turned you down. But come on, man. It wasn't even
Appreciate
like that.
You not talking to it consistently or something? Oh, you know who
I
might
have
have it? Marquise probably got it. Get it from Marquise.
what is that password?
Hit Marquise up. I bet he got it.
Oh, Honey Star 5. Yeah. Yeah, I'm gonna have to hit up Marquise.
Let me text
Yeah.
him, see where he at.
Well, no, boy, y'all funny talking about. Look at him showing out. Man, I ain't showing out. Stop that.
it. No,
Oh,
man.
you
Boy, you
you
better,
showing out.
boy, you better
Bro,
learn this shit.
I hear that. Man, you tossing them terms around. You tossing them terms around like you good. I said, whoa, he learned a
Like,
lot.
well, he already got his own firm and shit already. Well, he like,
Hey,
yeah, close
hey,
Y'all
in it.
funny.
Brandon, I
Yeah,
gave a
man.
presentation. I gave a presentation last week, Brandon. He done came in critiquing my presentation. Say, no, you need to put
Oh,
this in there first, and then you bring in that part. I said, okay. So I thought about it, and I was like, you know what? He right. I need to add that in. Let me add that
oh,
over
hell.
here. Oh,
Oh, hey, hey,
my
hey, Chris, send her
presentation
an
gonna be
invoice.
bomb. He ain't invoicing me.
I'm invoicing you, Mo.
He ain't invoicing me.
I want a
She
hundred
said they quick
thousand.
as shit. Like, you ain't invoicing
Hey,
me.
I want your investment accounts. I want your house. You can
I
have
want.
everything else.
Anybody have my house? My house is cheap. I ain't going nowhere.
Yeah, boy.
I ain't going nowhere, honey. I don't take out no. I took out one little small equity thing to see how it worked. A line of equity, it's like
Yeah,
10,000. That's it. I ain't touch my stuff. I said because I'ma always be ready for that rainy day. Something really really happened, emergency wise. You know,
yeah.
I could tap into my line of credit. I am not. I refuse.
Oh, that's what I want to mention too. Not to cut you off,
Mm-hmm.
man. I've been doing that. So my paycheck goes into Acorns. Well,
Mm-hmm.
I got it going. I got it going to 3 accounts, but most of it go to my Acorns account. So I got it going to my personal portfolio, my retirement, and my emergency savings. And so you get 5% APY monthly on the well, it's 3% on the checking account and 5% on emergency savings. So I've been taking full advantage of that. Emergency savings is a real thing. And I'm gonna read an article on that too. I've been putting up videos on these, certain little topics and conversation. But I'm just like, why not? Why not have an emergency savings? In case. You
So
know,
financial advisor in training.
yeah. So I'm taking my test soon for the SIE, which is the Introduction General Securities Exam, and then I'll
Agree.
take do the Series 66 after that, and
You
then
better.
start. Yeah,
You good. You could just trade me. So
1,000.
question, right?
Yeah.
You have a paycheck that has already been taxed.
So after tax
Okay,
dollars.
so here's what,
So after tax dollars, okay.
after tax dollars, yes. And you know how sole proprietors, sticking with our topic, have using these Cash App, PayPal, those kind of things, right?
Yeah.
And they have their money. Hold on, let me see how I want to say this. Let's say they direct deposit their money into Cash App.
Okay.
How will they differentiate not being double taxed? Because you already got taxed out your check. And if you direct deposit it, so basically, I guess is your cash out cannot be set up like a business account and direct deposited. Because if it is, and you direct deposit in Cash App, you're gonna get caught up with the taxes, the 1099 on your money that you've already been taxed as an employee.
Does it matter like the dollar amount or no? Like,
Well, right
But
now it's gonna. Well,
the
let's
direct
go. Go ahead,
what-
Chris.
so the direct deposit into Cash App. No, it's already been taxed if it goes direct deposit into Cash App unless it's a personal account, right?
If no,
So
I'm saying business.
okay,
it would have to be seen as a personal account then.
No,
yeah, you
it
want
can't be, but it can't be seen as a personal account if you set it up as a business.
So could you do like another Cash App or like
You
another
yeah, you would
Zelle
just make a
as
personal
a personal
account.
account?
Yeah, you would just make a personal account. You wouldn't
right,
send it to your business account.
right. No, I know what to do. What I'm trying to establish um for those people. Okay, 'cause this just happened. So y'all know I do payroll, right? For companies. So a lot of employees were having their money go to a business Cash App, right? They were direct depositing into Cash App. Cash App shut the Cash Apps down, shut the direct deposits down. They wouldn't accept them anymore. So so a lot of people had to so all those people missed their pay periods. And they did it right before June. It was Juneteenth, 4th of July, somewhere around that point, because it messed up their holiday pay. It messed up their paychecks. So I just assumed that those individuals had, tell the other ones too. Oh no, I'm about to give you a question. No, he could bring his own. Those individuals, I assume, I was like, did you have a business Cash App account? Because and then so I had to explain to them. I said, well, you better. Cash App is probably looking out for you, because if you put that money in a business Cash App account and you are an employee and you've already been taxed on it, you're gonna get taxed again. Because they're gonna issue you that 1099. Where? Wait a minute. It
Right.
should be 6, not 4. Put it on the floor right there. So I was that's what in my mind, that's what I was, so that's what I'm asking. Is that, or will Cash App differentiate that it's coming from a paycheck? Let me see. And
Both.
that's what I'm trying to figure out. And will they tax them? Will they 1099 them?
No, they won't 1099 them unless you did business.
Unless it's going into a business type, right?
No.
Does it matter if you do like a account with a bank, like a business account with a bank or no?
Okay. Let's say if you did direct deposit into a business account, you only get taxed if you actually did business. That's just a direct deposit check from your job, so to speak. That's not, you didn't do any service. You didn't do any business. So you wouldn't be taxed on that. That's already taxable income. You see what I'm saying? So let's say if your employer, you working for your employer, you have your check go into your business account. It's already after tax when you receive it through direct deposit. It's not going to be taxed again because it just went to your business account. Because you did no business. It's just an employee, it's a payroll deduction check. It's a payroll check.
So let's do this. What if you are an independent contractor and you're going to get a 1099 from that company and you put it in your Cash App account? Are you going to get another 1099 from Cash App?
No.
How do you know?
And the reason why is because it's a direct deposit from whoever you're getting it from. It's not like somebody sent you money, just through a regular Cash App transaction. This is from a employer. It's from a business. They will be able to differentiate from payroll and somebody sending you money for a service.
Wait a minute. Is it the same as like employer versus a contract mode, or would they be different?
Yeah, I'm going contract. I'm speaking excluding the employee piece and saying, because I'm trying to see if.
Well, I got a better question for you.
See, this is what I'm saying right here.
If it's Chase Bank, do you get taxed on that from a 1099?
No, that's different.
Why? Why is it different?
Because that's just a regular traditional account.
Well, Cash App has a bank account.
No, they have a bank account, but if it's set up like a business account, it takes on a different facade.
Right.
That's so
with that,
any business revenue is taxable.
That's the problem right there.
Right.
So if they're an independent contractor and they get a 1099, is that work or business?
But it's business. But that's what I'm saying. If the 1099, so that money, if the direct deposit comes in,
okay,
Cash App, if they don't have it, so they don't have it where it's saying direct deposit or transaction. It's just saying 200 transactions. So that direct deposit is considered a transaction.
Sure.
So what I'm saying is that if I have a direct deposit come into a business account, I've already been taxed on that money, and I put it in a business account, I'm gonna be taxed again on that income if they issue me a 1099 based on transactions. I'm gonna call Cash App tomorrow.
So when they're more than 200 transactions, though, right?
So, here it is, right here.
Yeah,
here it is.
It's right. It would be more than 200 or $20,000.
Okay. Yep. See, that's the part. So you would. So based on this statement, and y'all correct me if I'm wrong, you understand it the same way. Can I use my business account for personal payments too? So to me, personal payment would be that employee paycheck. It says no business accounts are for accepting payments for goods or services. Keep personal payments separate from your business account since these may be reported to IRS as taxable.
That's what I'm saying.
If you put your personal direct deposit from your employee paycheck into your business Cash App account, you're going to get double taxed.
That's what I'm saying. That don't make sense. Why would I put my personal check in a business account?
Because you wouldn't, Chris, because you understand. What I'm telling you is that's what we had some employees doing because and so Cash App shut the accounts down, the direct deposits down. They didn't shut the accounts down, they shut the direct deposits down. You couldn't direct deposit, kick them back because the person had already been receiving checks for almost a year. So to save them, Cash App would no longer accept the direct deposit because if they had kept doing that, that person was about to be double taxed. And we had several individuals. So
what was
the first time
doing that though?
Because a lot of people don't have regular bank accounts, contrary to popular belief, and a lot of people are, have their little side hustle businesses or whatever, and they may have been doing some work, for a temporary or seasonal job that had to be direct deposited, and they only had that Cash App account, and that's where they send it to. So what we had to do was get them to get the payroll companies that we use. We got them to use their direct deposit card. And I had to explain to. So when it happened at the second company that I was dealing with, it was happening with the second company, and then someone overheard my conversation, and they said, "Well, we just had to do the same thing." And I said, so I told the guys that were working for us, so I started asking more questions. And then when I seen that, I said, well, that's why. And they didn't know. They regular Joes on the street. They don't know. They don't look into that like that. They just know, they got them a card to accept money. That's all they know. And how they set it up is how it's set up. And so I had to get them to get those Wisely cards for their paycheck so that their paychecks wouldn't be delayed again because he was about to switch it to PayPal. I said the same thing gonna happen over there. So I was like, don't do that. Use the payroll company debit card. And do not use those cards for your personal, because they put direct deposit on those accounts, but Cash App don't have that on there. That people don't read. They don't understand taxable income. They don't understand the difference between business and personal. They just do what they think that's going to benefit them.
That's crazy.
Even,
Dangerous.
and then check it out. Not just that. Even this, we don't have to just talk about Cash App. Let's just talk about having a business account. How many people on TikTok and Instagram telling people run everything through their business? They're sending their direct deposits to a business account. Therefore, if you count net cash, exactly, it's wrong. Because you're going to be double taxed.
Good point, Mom.
Yeah. And I just thought about that when that happened to those guys last pay period. And so I was like, something ain't right. Like, why would they be, shutting them down? Is there regular, consistent deposits coming from legitimate businesses? Okay, what are they doing? How are they set up? And then I'm like, oh, okay. You guys are double taxing your own selves. So I almost sent a direct deposit to my business account, and I switched it to my equity account, my line of credit account,
right,
versus my business account. So I was like, oh, because I was about to screw that up too, but I wasn't issuing myself a 1099, so it didn't matter. Does that make sense, Brenda? Brenda rolled out.
No, I'm still. I'm trying to make sense of it. Say it. I know. You
Okay.
said a lot of things now. Say it again one more time for me.
So let me read it from here because this probably explains better. No business accounts. It says, can I use my business account for personal payments? Right?
Yeah, that's a no.
No. It said business accounts are for accepted payments for goods and services. Keep
Mhm.
personal payments separate from your business account, since these may be reported to the IRS as taxable income. If you'd like to use your Cash App for both personal and business payments, we recommend opening a new separate Cash App account through a different email address for any personal transactions. Now, I could tell you, when I first opened up my Cash App, I wanted it to be counted, personal payments to be counted for business on purpose, though. I knew what I was doing because I needed that. When I first started business, I needed that business income. So now, I very rarely take a Cash App payment. I actually have mine going to, I got a Square, I got my Square. So that's all business. So if I take a payment, it'll go through Square, and I try not to do any Zelle for business. And I have the PayPal. But initially, when I first started doing business, I was mixing mine too. And I wasn't concerned about it being taxable. I was more concerned about accounting for the income, business income. So I wasn't making a whole bunch of money initially. So I was just using whatever payment I received as income, business income. That's why applying for PPP at the time, um, I didn't have no issues with it because I was already counting business income. I had an issue when they first did small businesses and used the net profit, because I didn't have a net profit large enough to get any money. But when they switched it along the way and did the revenue, business revenue, I was cool with it because we was me, Chris, y'all, we was accounting for the business revenue. So I've always shown business revenue on my Schedule C, which is what we started off initially. Let me go back. Brandon, you weren't here, so I'll recap. I'm gonna recap how I started this show. Let me get the link because I have to go back to it too. So I said when I got home, I'd go back to it. So this is a good segue. Did I get it right?
Yeah.
He said, yeah. So the idea is so we don't get double text. Now it's starting to try to pay attention so that you can maximize and put that money somewhere else. Oh, I don't have Messenger on my iPad. Darn it, darn it, darn it. All right. Let me put the link in my email. And then you could let's see. What Krista ran off to?
I ain't ran off nowhere.
Look at him. I knew he always holler.
I'm right here.
All right, chill. All right. So this is the publication for small business. Oh, I said that wrong earlier. I said publication 953 is publication 334. So we established earlier that, how a lot of people always say, oh, you have to show, you know how when you do your taxes, it have that little note and say, oh, you took too many, this is like you took too many losses. You may want to consider if you're doing a hobby or a business. Well, right here,
according to the IRS, we talk about self-employed. It says you are a self-employed person if you carry on a trade or business as a sole proprietor or independent contractor. You do not have to carry on regular full-time business activities to be self-employed. Having a part-time business in addition to your regular job or business may be self-employment. It goes on to say a trade or business is generally an activity carried on to make a profit. The facts and circumstances of each case is determined whether or not activity is a trade or business. This is important. Let me make it big. You do not need to actually make a profit to be in a trade or business as long as you have a profit motive. You do not need to make ongoing efforts to further interest of your business. Boy, that's powerful right here, Brandon. You see that?
I was gonna say it again one more time.
All right, yeah, make it stick. It says you do not need to actually make a profit to be in a trade or business as long as you have a profit motive. You do not need to make ongoing efforts to further the interests of your business.
Now, can you explain what that last bit means to you?
It means that I don't have you don't have to keep adding or adding on to your business to continue business as long as you're showing the opportunity to make a profit. So for I gave the example earlier is me doing these live streams, right? I'm doing the live streams to capture clients. So I'm showing a profit motive. I'm not offering anything. I'm not selling anything. I'm just sharing information. But my motive, my hidden agenda is that if I have enough knowledge to pique somebody's interest to inquire about services. So when it says you do not need ongoing efforts to further the interest of your business, like some people say, oh, you gotta, you're not in a business if you're not making any money. Well, if I'm working towards making money, I didn't have to make any. So that when you see that statement on TurboTax, let me see if I get further clarification too. When you see that statement on it comes up on TurboTax, and it'll make you think. Like I get another example I gave earlier. Someone I was did their taxes today. They made almost a half a meal, and they had a loss of 12,000. Well, you would be like, you didn't make no money, so you shouldn't even be in business. Well, they are in business. They made money and they spent it. They just didn't add to it. So you could continue to do business and break even, and make nothing. You don't have to add to it to try to do something else. Ongoing efforts. You don't have to add another program. You don't have to add another department. Oh, shoot. I was gonna copy and paste it. Hold on. I think I would, if I would go back and look at the changes and when this was changed, I would say, because this statement wasn't here before, I would say that this statement came when Trump was in office. No, seriously, think about it. They audited his tax returns and he wasn't making a profit. And so people was upset because he was break even and he wouldn't have to pay no taxes because he was break even and on everything, right? And he was taking losses by giving out those personal loans versus paying wages. And so I remember before when I first came in my econ, they said the reg said at that time you had to show that you was attempting to make a profit at least 3 times a week in order to remain in business. And that and so when you see the statement that says, okay, you're not making no profits, so this ain't no business no more, this is a hobby, don't want you to take advantage of the business taxes, where the IRS is saying right now you don't have to, you just have to show profit motives, you just have to show that you are trying to make a profit, you're doing things to attract profits, so to speak. And I think that, so when I think about that, I think about them changing the rules to say what's acceptable for business and what's not. Because even the statement before that said, it said, uh, you do not actually need to make a profit to be in a business or trade as long as you have profit motives. Come on. What, like you said, what is profit motives? I mean, no, what is, you don't need to make ongoing efforts to further your interest in business. So I just need to sit around and talk about it. Man, I'm trying to start this business. I'm a businessman. I'm trying to get this up and running.
You don't need to have a motive. I mean,
Right?
you do motive, but you need to show.
Let's
Yeah,
see.
that's correct.
What did you say?
No, that's crazy to think about it. Like, okay, you need to be up and running. Oh no, you can start a business, show a motive, but be in debt and still break even on your taxes.
Hey, put in for the business deductions.
That's crazy.
I didn't make it up. You do not need to make ongoing efforts. Hold on. I need to make ongoing efforts to further your interest. Efforts. To further interest in business. Oh, here we go. It it really is possible for business owners to build on self-scaling companies without their constant involvement. It is common for people to not know what they want to do with their career goals. If you're unsure, oh no, let me see what this say right here. Uh-oh.
What more scamming about now?
I ain't scamming. Hold on. Oh, it's the whole book. No, we were talking about that IRS rule about business.
Mm-hmm.
That's their rule. I ain't make it up. Let me I know. Let's go to Chat GPT. Yeah, we're gonna find out what it say. What does it mean?
Chat GPT knowing about that.
Yeah. Let's copy it. Let me see if I can copy. Well, I don't know why I can't copy it from here. Let me do. Man, I'm gonna have to get the statement.
Let's see, I got it right here. Let's see if I copy it this way. Oh, it'll let me copy up here. What does this statement mean? Let's see what it says. It's saying a lot, Brandon. It says a statement you don't need to make ongoing efforts to further your interest in business suggests that, according to the context and perspective being discussed, continuous or additional efforts to advance or grow your business interests are unnecessary. So you don't have to do no marketing, you don't have to do no promotions, you don't have to do no email blasts. You can just show that you want to, and you can just exist. Oh,
It means that you have reached a level of success or stability in your business endeavors where additional efforts are not required.
mm.
That's the fact that you could post and you already got 1 million subscribers, so you ain't gotta do nothing. They're gonna come to your page anyway. Your business interests might be set up in such a way that they can maintain or grow themselves without further active involvement from you. That's people like TurboTax and QuickBooks who got such a reputation. People can automatically refer them. The company ain't even gotta do much. Or Chris, he put them sneakers out there. Everybody already like Jordans. He ain't even gotta put no advertising in it, spend no extra money or anything, because people are already familiar with it. When they see that page, boom, no extra efforts. He just his motive to make a profit is to show that them Jordans is on sale. He ain't gotta buy no ad. He ain't gotta buy no newspaper. He don't have to go out and do some street media, no flyers, no nothing. Makes sense. Where y'all go? Brandon,
Yeah, I'm here. I'm here. I'm listening.
does that make sense though? For
What
the
you say again? I
ongoing, for this
wasn't
part,
listening.
huh?
Say again one more time.
For this part, where it says you do not need to make ongoing efforts to further interest in your business. Did that make sense? Using Chris as an example, he just have to put up the social media page. He don't have to do nothing extra.
I mean, wouldn't that be added onto your actual tax as far as like expenses at the end of the year if he added something on social media?
Yeah, but what it's saying is he don't have to pay for it if he don't want to. He don't really have to do anything. He can just post it. He don't have to do anything extra to
Oh,
for yeah, you don't have to. It's basically say you don't have to do anything extra to actually
gotcha.
qualify to be a business. You just have to show that your motive is to make money.
I mean, they're just making it easier it makes it sound like it's making it easier for the average business to win on the tax aspect of it. But
Right. Well, that's all that matters. That's where your benefits are. It don't matter to the public. Here's how
right,
you can keep more of your money.
right. Hey, don't
Right.
advertise.
All right, well, I'm gonna start doing that then. I'm gonna just start doing enough just to say I equal what I spent. That way I ain't pay no tax.
Well, you still have to report your expenses now. You can't make all the money and don't report no expenses. Think you're gonna get some type of break. That ain't gonna happen.
Who don't report their expenses?
Shit, you be surprised.
Oh.
But that's not. I didn't point that out for that. I didn't point that out for tax purposes. I point that out when people say, "Oh, you ain't got no business. You got to hire me." That's why I point that out. Still a business. And then the other part, then the other part we talked about earlier, Brandon, is being able to, as a self-employed person, how to identify your entity. So if you're a limited liability, if you are incorporated with the Secretary of State somewhere and you got an LLC, you're self-employed, but you are a single member disregarded entity. If you are not incorporated, then you are considered a sole proprietor. And then if you are a person that gets paid, like a doctor, dentist, lawyer, or a business owner, who make your own rules, make your own hours, direct your own traffic as far as how you do your work, then you're an independent contractor. All self-employed is they identify as a self-employed person under one of those umbrellas. Hey, what you doing?
Okay.
I ain't see Sanaya. Yeah, so it makes sense. So this is important when you're filling out your tax form or you're getting into a lot of government forms about your business. Some people, they're not doing a whole bunch of business, they're not doing a whole bunch of expanding, they're just buying and selling products. That's all they're doing. That's fine. You're just a sole proprietor. You're not registered with the Secretary of State, none of that stuff. You're just a sole proprietor. For those individuals who want to start doing contract work, whether it's commercial or government, you're going to incorporate and if you're one member owner, 100%, then you're a single disregarded entity. Once you start gaining revenue and your net worth increase in your business, you start gaining a profit of some sort, then you may classify your LLC as either a S corp or a corporation, depending on the dollar amount or depending on how many members. One corporation have more than 100 members and the S corp have less than. So that's how that works. Or you just single. If you're never going to incorporate, you're just hanging out, freelancing, buying and selling your little chips, then you'll be a sole proprietor, and that's cool too. And then if you're going to get some type of licensing of some sort, or you are doing work and it's self-directed, meaning whoever you're being paid by is not telling you when, what, where, and how to do what you're doing, then you are independent contractor, more on that professional side of the house. And that's cool too. And you still could be self-employed.
Gotcha. Okay.
So it's just a matter of the classification. If you get married and you and your spouse decide to do business together, like many people do, if you are married and you're both on the articles of incorporation, then you can elect to file as a partnership or as a qualified joint venture. If you both own there, if you're not, if you're married and only one of you are on the business incorporated, then you can only file as a partnership. You do not qualify as qualified joint. Okay. Shit, I learned something today. I don't know what y'all talking about. What? Shoot, I taught myself. I ain't gotta watch my stream. Shoot, I'm educating me.
Learn while sleeping. That's good.
Know it. Let's see. And then, okay, so this is where we were. And I'm just kind of awake. So I'll keep rocking with this stuff oh, Brandon, this is something else we learned. So Chris and I, we was on it. So I skipped the question and answer piece to go to the mileage. Right?
Real quick. This is non-related.
What?
I don't know if anybody is shopping, but Nike's extra 25% off ends tonight. Where we going?
Can I buy them pink Jordans?
They don't come out till October.
What do you mean? No, the ones that just came out.
The 11th?
Yeah.
Yeah. They ain't on Nike though.
Well, never mind. Oh, I'm gonna get them anyway though. But you hold that thought since they ain't Nike.
Okay.
Oh, let me see. I can't find that. Okay, here we go. Mileage rate. So we looked up historical mileage rates, right? Because the mileage rate has gone up again. And let me get the article. I'm recapping if anybody out there in YouTube world watching us. I'm just recapping from what we started off at 6:30. And we find out some good information. Let me go to the link that I was reading from that I like so much. Hold on a minute to send it to myself because I like where we got it from. It was 99 to 2024, I think. Oh, they break it all the way out to 1862. Hold on, let me see if I can find that link. I might have to send it to myself because I like the website. Let me get it off my phone. I like the website that I was using because it flowed into the stock market. Hold on, Brandon. Let me get it.
Right.
Let me get it.
The way people been spending a lot of money on fake eyelashes.
Not me.
Did we have we had a little spat about that, didn't we?
Yeah.
Who? Not me.
No. We I think we was making fun of people wearing fake eyelashes.
I don't remember what we were doing. Probably what they were spending their money on. They crazy. Shit, I'm about to cut my hair budget down. They getting highway robbery.
With the weaves.
I just braid, but still, even that's. All right, Brandon, check this out.
What you got?
So that chart is cool, but I'll put it right here. So we went through this earlier. It's a really good read. As a matter of fact, let me put it in the back chat. Back chat. Be quiet, you little peanut. I just saw Marquise on Messenger.
Yeah, I seen him too.
I said, click that link, you little peanut.
Oh my God. Microsoft eliminates its DEI, diversity, equity, and inclusion division and fired all of its employees. It's no longer business critical to invest in diversity. Dang.
What?
Microsoft did what?
Let's look at that stock.
They eliminated the DEI program.
What?
How many people was in that program? Employed.
It had to be a lot, but
let's look.
That's funny.
Insider business. Pull up the yeah.
I'm about to pull up that chart.
I'm at the article, not the damn chart.
Yeah, we need to pull up the chart.
Come on now. Why can't you use that right there?
Microsoft laid off the DEI team and his lead wrote an internal email blasting how DEI is no longer business critical.
Mhm.
After Microsoft laid off an internal team focused on diversity, equity, and inclusion, a team leader blasted. Hold on, let me stop this ad before we get a strike. Stop that. Stop.
Thighs and hips and a butt.
You want something that's fully integrated.
DHA and their fatty tissues in those areas. This is
Microsoft laid off an internal team focused on diversity, equity, and inclusion. A team leader blasted the company for a lack of investment in these efforts. True system change work associated with DEI programs everywhere are no longer business critical or smart as they were in 2020. A leader of team wrote in an email sent to thousands of employees, which was viewed by Business Insider. A team leader whose identity BI has confirmed did not immediately respond to a request for comment. Many technology companies, including Microsoft, made commitments to improve diversity efforts after 2020 murder of George Floyd by a Minneapolis police officer and historical protests that followed. In 2020, Microsoft pledged to double the number of Black leaders within the company by 2025. The company's progress on this pledge is also unclear. Despite those commitments, many tech companies have appeared to retreat somewhat from diversity efforts. Zoom laid off a DEI-focused team earlier this year, Bloomberg reported. Google and Meta also cut DEI programs last year, according to CNBC. Our D&I commitments remain unchanged, Microsoft spokesman Jeff Jones said in a statement. Our focus on diversity and inclusion is unwavering, and we are holding firm on our expectations, prioritizing accountability, and continuing to focus on this work. I bet I know what probably happened.
What happened?
Let's look it up. I bet they got money to do that program.
Mm-hmm.
Let's see. That the government gave them money, grant money ran out for the program. There's no renewal of that grant. And therefore they're not going to pay for that. Government probably told them that they had to invest a certain dollar amount to meet that initiative, and they decided not to. Let's see. I bet that's how it went. Did the government give tech companies grants money
That's gonna hurt.
to start
That's gonna hurt the white man.
a DEI
He says it's gonna hurt the white man.
Told you. Look, what did
Yeah.
I tell y'all? I told you.
He got $6 billion.
No, he locks in. He just locked. No, they're saying right now he just locked in $6 billion in climate funding behind DEI, inclusive requirements. So now I'm gonna tell you, Department of Energy is pushing decarbonization to be equitable and inclusive. Biden administration locked in $6 billion in federal funding for energy and manufacturing behind a series of mandates relating to DEI initiatives. The Department of Energy has revealed DOE announced $6 billion in investment granted over 30 projects across the country as part of Biden's Investing in America agenda on Monday. The projects are amid at boasting decarbonization technologies that the department says are crucial to meeting the Biden-Harris climate and domestic manufacturing goals, spurring on next generation of decarbonization technologies in key industries like steel, paper, concrete, and glass will keep America the most competitive nation on earth. Energy Secretary Jennifer Granholm says in a statement, these investments will lash emissions from these difficult and decarbonized sectors and ensure American businesses and American workers remain at the forefront of the global economy. The announcement later clarifies that projects receiving funding are required to develop and implement a community benefits plan, ensuring that their impact would be equitable and inclusive. The department also says it will monitor the implementation and may withdraw award funding if they are not satisfied.
Yeah.
Yeah. Definitely
That's
cap.
part right there. So, CBP are based on a set of four core inner department policies, priorities, engaging communities in labor, investing in American workforce, advancing diversity, equity, inclusion, and accessibility, and implementing the Justice 40 initiative. Now, so I bet
His ability to beat Donald Trump if she were at the top. His ability to beat Donald Trump if she were at the top of the ticket.
Look,
I bet
Vice President Trump to be vice president.
well, what is you watching? Let me see.
I wanted to
What'd he
pick
say?
Vice President Trump. Y'all didn't hear it? Hold on.
Oh, what are you talking about?
What's that?
Hold on.
I'm out, man. That nigga's tripping.
Look,
His ability to beat Donald Trump if she were at the top of the ticket.
Look, I wouldn't have picked Vice President Trump to be vice president.
Oh.
But I think he's not qualified to be
Dang.
president. What?
I don't know if that's AI or real, man.
Yeah,
I think it's real.
That's crazy.
Oh my God, this is hilarious, man. I wouldn't have picked Vice President Trump if I didn't believe Trump could be president.
There you go. I knew. Look, darn it, I ain't gonna be able to see it. Oh, but you can see a little bit of it. It said companies made $340 billion in commitments to improve racial equity between May 2020 and October 2022, according to data. This is what I need to look for. Let me see if I can get it. I told you they made money, and now the grant is over. Of course, they're gonna cut the program. I'd cut it too. It's business at the end of the day. Once the funding run out, if there's no new initiative, now they got to find a new initiative.
Mm-hmm.
The buck wages.
For $6 billion though? Like what the hell? $6 billion?
Oh, that's the new initiative. No, the $6 billion is the new initiative.
Okay.
The $6 billion is this right here. Hold on. Let me go back. This one. No, hold on. I'll go back and find it. The $6 billion is a new initiative, and they named it different. I was pointing out that I said the reason that they dropped those programs is because there's no more funding. So if that program ran, the DEI program or the initiative went from 2020 to 2022, which is about right, 3 years, 2021 to 2. That's how long a grant money usually lasts when they put money out there for which programs. If they didn't vote to keep it going, that means that grant dies out. Then that means there's a whole nother initiative out there. And so that $6 billion initiative is the next. That's why they said DEI is behind it. Let's see. Like 6 billion. Here it is. Let's see. Oh, that's 2021. See, he signed this out, but it died out. So if he gave them a little bit more in 2024, they just not firing people. Yeah,
Mm-hmm.
they ain't put no more money into that program. Here it is, right here. He put $6 billion in the climate funding behind diversity and inclusion, but it's behind these programs right here. But they're basing it on decarbonization. Now I'm going to tell you. Remember, I don't know if you remember, Brandy. I don't think you was on last week, and I was talking about environmental protection and the Paris agreement, and they're going out. How they're going out to the different rural areas and scoping them out where the nuclear plants and all these plants are, because and then they're putting money into it. They're trying to find storage space for carbon, and so but they're coming to the areas on a help basis. But if the area is not educating themselves on how to keep their home spaces healthy or to keep them safe, then then the companies that are there are going to just be storing carbon and storing waste, nuclear waste, and people going to continue to get sick. So you have to educate. And the only reason I know this is because I'm on a big environmental justice project right now. So I've learned a lot. So I know when I seen that. And so what caught my attention a second ago is this right here, decarbonization technology. Let's see what that consists of.
Or just move to Italy.
Italy's selling their houses for like $1, ain't it?
Huh?
Italy's selling houses for $1. This is lady in GSA, her husband, they about to move to Italy.
Oh,
because they bought cheap property.
Sweden too. Sweden selling houses too for super cheap.
Mm-hmm. So let's see. This says decarbonization and sustainability.
Brandon.
No, you know how you just piecing the puzzles together as far as like the decarbonization?
Yeah.
Is there any funding behind it?
I know what yeah. That's $6 billion.
Guess who? Okay. Guess what came up? Oxy Petroleum Corporation. OXY. Tell me who's the number one producer, or tell me who's the number one shareholder of Oxy right now. OXY.
Pelosi.
You said who?
Warren Buffett.
Pelosi.
Warren
I was
Buffett.
going to say Warren Buffett, but I wanted to say Pelosi because she always into everything.
Come on.
Like he's still buying that shit.
Follow the money. What's the companies, Brandon? What I need to put up? Companies with publicly traded companies.
No, I typed in decarbonization technology stocks. And it's
stock.
the second one, yeah. It's the Money US.
Follow the money. He just put $6 billion behind this. You see the second one?
Yeah.
The April article.
Go up one.
That one?
Yeah, US News Money.
That's 2023 though.
But no, he's steady buying though.
Yeah.
So we need to check that out. Hey, this educational only. We just sharing information, reading articles. This is no tips.
No tips, no tricks.
I got a tip for you. Investor die. That's your tip.
Hey, wasn't this on the top earners list last week?
Nope.
How you know, Mo?
Because when we went live, and I was sharing what I was telling with the kids in the class, and I could have sworn I saw this.
You ain't see that?
Oxy. You say Oxy?
Yeah, OXY.
I remember seeing this before. Let's see. See how they came full circle from an IRS article?
Yep.
I think that's it.
Thanks to her.
Ain't that something?
Yeah. Me and Brandon.
You said what?
You and him.
Yeah.
Well, actually, me, Mo. I'm the one that found the post.
Well, you only found the post because I was still reading the article.
Okay, you win.
I don't need to win.
You little knucklehead.
I don't need to win.
You want to win.
I want to be. It's a group effort.
That's what I'm talking about.
I need my
Education.
teamwork.
Education, y'all. Get it together.
Or and like you go to bar chart, look at how these things are stacked.
Really? I'm about to bring it up. Ain't that
Hold
look
up,
like
bro.
something that's about the bus?
Yeah, but look at it from do like a year out.
Ooh,
I do
that look like a pattern to me right here. That look like a repeat pattern right here and right here. It's gonna go, boy. If that, what you say, go to where?
uh do like 1 year out.
Oh, it could be about to fill a gap.
1 year, yeah.
1 year
Oh
out,
no,
1 year like that.
I'm sorry, do all
Oh,
and then throw the 50 up on it.
do all in what?
Throw the 50 EMA on it. Or SMA.
Change out to the SMA.
Yeah. Or EMA, whatever, which one.
I got EMA up, but you want to put it on? Oh, oh shoot, I got the EMA 50 up. I got EMA SMA too. Let me close this one. Oh, I gotta take one of them off.
Oh no, just hit that eyeball on it.
Yeah. Oh, I don't know what I did with that EMA SMA. Let me get rid of it.
Damn, boy, Amazon put people out of business, man. Dang.
That EMA. Wait, what you want the EMA SMA to be?
No, just get rid of the 200. Just close it. Just click on the little eyeball and then
EMA close to 200.
yeah, and then zoom out
Man,
a little bit.
I gotta pay attention
Like
to
that.
this.
No, other way.
I really gotta pay attention to this, man. Amazon is putting people out of business.
Oh yeah.
You click on all at the bottom.
Oh, they wild for this mass deportation now. Damn.
What we looking at, Brandon? We know that dip right here is COVID.
Yeah.
So it's coming back. It then got back to before COVID.
Yeah.
Woo.
What was I was trying to show you like on the 50. It has like a little cup pattern towards the
Yeah,
bottom.
I see it right
And
here.
then yeah. And you already had the 200 up on it. And when you add
200 like that.
200, yeah. Now what type of crossing is that, Mo?
Oh, if that 50 cross that 200, that's a golden cross. That's it, right? Yeah, because the dead cross if the larger moving average go under the slower.
We ain't teach you that.
Shit, that's the first thing I learned.
Woo.
Yep.
Okay.
That 50 crosses. That's a little pop right there.
Mm.
That could be a little pop. It looks like when it consolidates like that, it does go with an upward trend.
Mm-hmm.
So what I need to put on now, the daily.
Let's see.
Year to date.
I mean, shit, hell, you put on the 1 day and then zoom out. It's just hugging the hell out that 50.
Yeah.
Dang.
1 day.
And then zoom out, or roll out, scroll out.
Man, how do I get it back, Brandon?
Refresh it at the bottom.
Mm.
That was a 1 day. Wait, what time period? I'm putting the one out.
Oh, yeah, 1 day. Hold on, let me,
Yeah, what hour, huh?
Oh, hold on. See if I can do it here. I can't do it here. I wish we had that magic mark on this thing. So yeah, refresh it at the bottom.
Refresh it.
No, so on the chart, the little arrows to in and out, the the two
Oh,
plus, the minus. You
minus
see
like
it?
this. Like
Mm-mm.
that. What?
Wish I could
The
show it.
arrow going in the circle?
Yeah, that one.
Yeah, I clicked that.
And then zoom out or scroll out.
Like that.
Yeah, there you go. Yeah, that's all. Yep. You just hugging each other.
Yeah, they pretty. Look like they want to break out a little bit. That's the hourly. That's above it.
Oh no, up top hit the daily.
Huh?
Up top hit the daily. I mean, it's basically that right there.
Like 1 day?
Yeah, the 1 day. I'm sorry.
Okay, now refresh it.
There you
Oh
go.
yeah, so better. Oh, okay, I see how you say it's hugging it. Um,
If I was to play this, I'll probably hit it.
got a lot of volume down there.
Do.
Oh,
That's the buffer though.
it got earnings coming up. We should play it. You looked at the bar chart?
Yeah, look at the bar chart now.
All right. Wow. Wait, let me bring up the R side real quick. Oh, I thought I had enough. Bar chart. What's the ticker? OXY.
That's it.
I'm gonna look at his
Hey, Caitlin Clark broke the assist record.
she started doing that with Angel. Angel got them consecutive double doubles.
Oh man, here you go with
She
that.
wasn't even paying attention to no assist record. All of it said she switched up her game.
She got 19 assists. She been doing assists, man. Come on.
She wasn't doing it to that level to Angel start chasing the double record
Man,
and beat
Angel,
what you call it to style to try to get the rookie of the year status. Stop.
man, Angel be padding her stats.
How?
She be missing all them damn layups and then
That
get
ain't
a rebound.
they don't be calling the fat. What you? Oh my God! Don't. We're not about to have this conversation.
Look at
He
Angel's shooting
said.
percentage. Look at
He
her shooting
said.
percentage.
Patton stats. Angel
Yeah.
been doubling since I've been knowing her to be double.
You think Angel is better than Asia Wilson?
I didn't say she was better than Asia. Asia is the top dog. Asia's number one in the world. Ain't nobody better than Asia.
I just asked if you thought she was better.
Heck
That's it.
no, come on now. Asia is the number one top dog in the world. Nobody beat Asia right now.
That's right. That's right.
Asia's a beast.
Oh
I'm
my
just saying.
God. Amazon Prime Day drove 7.2 billion in online sales to US retailers in first day, Adobe says.
We missed that trade.
Yep.
Yeah, open interest is big, Brandon. Today,
Uh,
open interest went crazy today.
look at the so go to I was looking at I was to trade this June. Oh no, January 16th, 2026. And like it's still stacked up.
Yep.
I'll tell y'all something I might invest in. I might get a ADR for Samsung.
What's
Y'all
an
know what
idiot?
an ADR is?
No, you gonna
Mhm.
tell us?
It's a American Depository Receipt. So it allows you to invest into a foreign stock. Since
Oh, I heard you.
Since Samsung is not traded on an American exchange, you
Mhm.
can buy ADR for where it trades at.
We're late to the party, Bridget.
For real.
Shish.
Looking it up right now. The ADR.
Yeah.
But okay. As far as Oxy though.
Yeah.
Hmm.
Oxy, man. Yeah. I still got some Oxy.
Not bad. We could get um.
Hey Chris, would this be considered chasing?
Huh?
Would this be considered chasing if you got into Oxy or or either both of y'all know would this be considered chasing?
We could take the
No,
trade
man. You know why it's not?
because we actually
Because
got legitimate. We was led
like
to this.
what's the price on Oxy right now?
63.15.
Uh-huh.
Man, Oxy been around 62 between 60 or 57 to 62, $63 for at least a year and a half, at least. It ain't moved much, bro. So at this point, in my opinion,
Yeah, 2020, 2022.
yeah, it ain't moved much. So I wouldn't consider it chasing, in my opinion. So
And we were
Yeah.
led to, I think, chasing. I mean, this off of the strength of coming across the information by finding out why Microsoft DEI program failed. It was dismissed.
hmm I think the chasers would be
Yeah.
somebody that's chasing Nvidia or Apple right now. Even though Nvidia been getting the brakes beat off of it.
Before Chris asked that question, I was about to go and look at its competitors. Let's see. Maybe we could get somebody on the come up. Let's see who the competitors are.
There's somebody on the come up.
Yeah. And that from y'all. For somebody you could rock with. Maybe have a cheaper price.
What's up with this COP, Brandon? Oh, that's even more money. Hold on. Let me go back. Oh, let me go back to Oxy. I want to look at something. Let's see.
Ooh.
Let me go back to Oxy. I wanted to see. Let's look at the inside trades. They buying, ain't it?
Looks like.
Look like they buying. They definitely sure been buying. Millions. They've been buying since March. We late to the party.
Yeah, right.
Shit, we way late to the party, B. The CFO, the VP. Wait, award being they sold it?
No, they were giving these shares.
Oh, so they've been giving them shares. So they've been making money, huh?
Yeah.
So that's like an indication of earnings might be a little be a little poof. Let's look at the financials. Oh, they're trying to get back in the swing of things. The sales went down, or that was what we in? We going in the second quarter. We'd have to look at microtrends. We have to look at microtrends. This one stops at 20. That one stops at 23. I think microtrends is current, right?
I believe so.
No, they stopped at December 2. So we'd have to see it for the charts. Huh? What was last quarter? The revenues for first quarter 2024. I wonder if it's on Yahoo Finance. Let's see. Financials. There we go. Oh, that's it. Is that in? It went down. The revenue.
Yeah, they're down. They're down for the quarter, down for the year. Quarter down, what, 17%, and for the year they're down 22%.
Where you at?
I'm at Walmart.
But with that news, uh,
What you in, Brandon?
Wall mine.
You ain't talk to me about that now.
Yeah, I did.
Oh my God.
Wall mine?
Yeah.
Like M-I-N-E or
Yep.
D? Mine. I ain't never heard of that. You fired.
What you talking about? You just type it in up top. There it is. Watch.
Brandon, you fired.
I'm not
You ain't keep,
five.
you supposed to keep me on point.
Shit. If I can reach you.
Ah,
That was a good one. That was a
Yeah.
good one. If I can reach you. Uh, I thought you. I thought you said it was down for the year. Look like it was up for
Yeah.
the year.
To the left. Revenue, EBITDA, income, um,
Oh, I
revenue
see
per
it.
quarter.
Year over year.
Yeah.
Mm.
I was gonna say, when was that article
He look good
posted?
with the carbon.
Yeah.
This one,
No, the one
this
that you read off initially.
or the Biden for this one. Like March 26, 24.
Is that for the carbon
He
one?
just yeah, decarbonization.
Mm-hmm.
Yeah, yeah. They just locked in this bill in the first quarter 24.
Okay, so that might have some. They might give it a little jolt.
That's what I was
6
thinking.
million.
I said, but I was thinking it may go fake out and give it a little bump.
I mean, but Warren
Or
Buffett's already said.
it may have already gave this little bump right here. You say Warren Buffett already what?
I mean, Warren Buffett's already into the stock. I mean, I don't know if he made a
Yeah.
profit yet, but I don't know if he's still buying or selling. But
If he holding on to it, it has some merit, right?
most people like to believe. I mean, I'm looking at it on a monthly. I mean, like that last candle.
Oh, I like this little chart. Hold on. Maximize the chart so I can see it. Right here. A little candle right there. Let's see. Yep. Today the 18th. What is? The R side is at 58. You right. It's riding at we said it was riding at 20 and at 50 and at 200 is riding at 22.
Mm-hmm.
Which one? Which way? Oh, we just say about the filings. It has an 8K filing. I just saw something that just caught my attention. There it go. Uh, something just caught my attention. Oh yeah, results of operations and financial conditions. That was the first quarter. Hmm. As you usually, this little consolidated. This could have gone off the news. This little candle right here, or whatever. So, and then they got earnings coming up. So,
Anyway, something might happen.
look, huh?
I said, yeah, something might happen.
We'll see. We can paper trade it. What's that big vessel about? All right, close that the darn chart. Let me go back to his competitors. Maybe we'll find something in somebody else. Let's see. Let's look at a cheaper stock.
Mm.
Look, Brandon, this thing went up 4,000%.
What did?
Look right here, Prairie somebody operating corp.
Oh, that's a good old pump and dump.
Good old pump. Hey, I would have took it.
Yeah. Well, I ain't gonna lie, I would too.
I take them dollars. Wait, let
I'd
me
have
go to
inside trade that damn thing.
right. Look. Wait, pump that dump that. Right here, I guess. What are options? Yeah, it done went all already. Like 4,000%. Oh, girl.
That's,
Wake up, Chris. Huh?
I was gonna say it's got some options on it.
Oh, wait a minute. Let's go back. Oh, that was yesterday. We missed it.
You mean wake up?
Just what I said. They don't have no options, Brandon.
Okay.
We missed it. I
Damn.
know. Could have catched it on the way down, ain't it?
Yeah.
4,000%. It must have been a darn what you call them things? Reverse. I mean a split.
Split on it.
Well, it had some news of some sort. The low was 18 cents. It came out of the dark ages to 18.50. 52-week change. That's a lot. Look at this 52, 56 cent change. Let's see what they got some options. Oh, went straight up. Look, straight up. We ain't got no options either. Never mind us. We just fishing. Tidewater. I knew they had options. We ain't got much volume going on in that. Got some puts though. A couple of it. It's a small. They sure asking a lot for these damn.
So yeah.
Well, that this one. Some people bought $5 options. I'm messing around you, Brandon. If there's anything else you want to do, we can. Yeah, I'm just messing around. I mean, I would, just looking at its competitors and seeing, especially the ones that are cheaper. Look at that. We just did Tidal, right? Tidewater.
Yeah.
Tidewater. This looks Sable Offshore Corp. Let's see, they have some options. Nope, they ain't got none. Man, Brandon, we too late to the party. We should have been looking at this in May.
For real.
Because that looks like when everybody looked like they made their move.
Let's look at this one. These damn pups. Oh, wait a minute. A little cheap one. Oh, Brandon. Oh, open interest 28,000 for five. What's the how much was that during what's it is? Them very cheap. Look, do we look into this one? Nice little volume.
I don't know. That could be a pump and dump because that's the only one.
That's the only one I.
Yeah, 26 open interest on it. Oh,
Yeah, just on that $13 call. As cheap as it is, it wouldn't even matter. Let's see. Let's see why you the only one got some moves going on. What's going on? I should have seen when was the earnings. I looked at almost all the cheap ones. Let's see. But you know, that's how I got my. You remember coming into the election year, so we know what's on one of the policies now.
yeah.
Decarbonization.
Right.
What you said? What was that, Chris? What Chris say?
Nah.
You know, so because you know we ain't paid attention to policies in a minute,
Right.
so we got to get the list again. I made some good trades on that list last time in the election year. Then who had made that list? You, Brandon?
Ain't no trade.
Be quiet, Chris. I'm not talking to you. Go sleep.
You the one that should be going to sleep.
You don't tell me what to do. I'm retired. That's a pop.
That was a good comeback, Mom.
Yeah, talking about I'm retired.
I got him back from early today. He got trying to front. Talking that trash.
Little peanut trying to talk. Hold on, what's this right here? Antero Midstream Court. We need to see the ATR.
We looking at stuff that he called the ATR. Brandon, what's the ATR? It's unchanged. It ain't making no noise.
Average true range. You got to go to FinViz for that.
I know what the ATR mean. I was telling him to get it.
Nah, little sleepyhead mo.
Let me go to FinViz for you. Oh, is that on that what you just tell me? The wall mine. Maybe it's on that. What was the ticker? I forgot. AM. AM. Okay. Let's see. Does it have ATR on here? Nope. I'm afraid it don't.
Fire.
It got a good dividend though.
6%, 90 cents.
Yeah.
I think I like it for the dividend.
That's a little high, but
6%?
yeah. Because don't you want like an average between like
Through
like 2 and 4?
3 to 5?
Yeah.
Oh, I mean, I just figured 6% right there. I could get a little dividend check. Get out. Yeah,
It's
they
only
got money.
what
They got some money, Brandon.
14.55 a share.
Look 56. That's only $14.56. They got money though. They ain't in trouble. Look at the PE. Look at the profit margin, operating margin, gross margin. Look at the REI.
Debt to equity ratio
1.25. That ain't too bad.
1.67.
Well, the 6.7. They might be using debt to me. I mean, they got good money. I don't even know why they got debt like that.
Well, let's see if you invest in it.
I might.
Can't be Mike.
Let's see. Looks like it might be back on up and up. Shit, is that definitely something happened in the first quarter? We've been slipping on our Pippin. Missed out on some good dollars, y'all. Probably because the election year started and the policies. Yep. Just like we always came in before. Okay, we got to find out what the rest of the policies are. We've already missed out on some money. Remember, that's how I made money on fuel cell. That's how I made money on Ford last election.
Yep.
Twitter. Dang, we were already behind the power curve. Monica Lamb, get it together.
Get it together, Monica Lamb. Or the lamb you will get to the slaughter.
So, okay, so let's go back. Who made the list last time? So I can learn how to make it. Should I just say presidential candidates?
I think Brandon did.
Presidential candidates. Brandon, how you make that list last time? Oh,
okay.
Let's see what Kramer. Yeah, remember we had the stocks that may do well under the policies for Trump and the stock. Shoot, we might could pull out them same policies. That same list if I could find it. Let's see what Investopedia got. Yeah, where did you get that from? You had made that on an Excel sheet?
No, Oba made that, man. And I think I don't know if I kept it or I found it somewhere.
I still got it.
Yeah, I got it too. I got to find it though.
We can probably get it out the photos in the group. Let's see. That ain't nothing. She always having a disaster when she don't do the right thing. Chris' little favorite fan. Okay.
Who's my favorite fan?
The Clark girl. She had a tantrum. She did a temper tantrum on the sideline.
No, man. Get out of here with that favorite fan stuff. My favorite player is Asia Wilson.
Yeah, Asia is a beast.
Better than all of them.
She a beast, bro. Hey, you know Carolina whole team are 5-star players except for one. They're gonna be undefeated again this year.
Yeah.
Dawn is a damn goat, bro. She knows how to attract players, but I think eventually all the WNBA players who coach is gonna be attracting all the black superstars.
Yep. That's right. That's right. That's right. That's right. That's right. That's right.
So y'all gonna teach me how to come up with this list or what?
So I think I don't know. I think the list might be a little easy to make if you find out what some of Trump's policies are.
Yeah, that's what I'm
So I'll probably find like some keywords,
trying
probably
to go to the
like
policy like we just did with the
yeah, or like where they pass policy and legislation or whatever. Or like the bills or stuff like that, and see if you can.
yeah, and they probably pulled it from the policies. So it looks like they doing solar.
Can't you about to get that?
Let me see when this article was written. This is all his stuff right here. Let me see when this article was written. Oh, it just was written yesterday. You got to break down between the two. Okay, it's cool. I want to work on that. We'll get us a list. We're going to get us a list. Let's see something. See, that's why I shouldn't be up this late, because then I get hungry. See what y'all have done. Y'all have made me hungry. Let's send a little peanut head.
Always calling somebody peanut head.
You got a peanut head. I see you in the gym with your little crew.
What little crew? What you talking about?
Your little crew in the gym.
Yeah, I'm gonna get them on you.
What?
Yeah. I know what. Our crew gonna jack you up.
Shit. My shot group is tight. You tell any one of them knuckleheads to bring it.
All right, Mo. Mo talking tough.
She said my shot group is tight.
You better know it. So
Nobody.
When's the last time you went shooting, Mo?
I don't know, but I need to go. That's a good idea. So I can be ready to pop your balloon. However, if there's something to say, red flag. So green energy. renewable energy sectors. So, okay, let's look this up. Let's see, Brandon. What's is First Solar? Oh, that's a thing. I remember that stock from last year being on the list. First Solar. Oh, it already did almost a cup. Let's go year to date. First Solar. Shit, First Solar got some money. They ain't got no dividend. I remember that stock though. In phrase. That's spell right? Oh, phase. In phase energy. They got some dollars too. Oh, that Chris gonna say they debt too high.
I was about to say, look at that
There you
quarter
go.
and look at that revenue.
I know. But I'm saying this is if he went if he
Yeah,
these are
that's
the
all.
things these are the things under the green energy.
No, Mo. Look at that chart. Look
Hey,
at that chart.
I'm just sharing with you the
Oh,
companies under green energy. I didn't say I
man,
was
I'm about to get on your ass.
they ain't about to do nothing, Negro. Ooh, and look, all of the green and looks like all of the green energy companies is doing bad.
Mm.
But boy, it doesn't mean oh Lord, they look like they about to go under.
Mm.
They about to be bankrupt. They ain't got no money. Y'all need to go borrow y'all some money. They got market cap. But hey, did somebody do a show on market cap?
You said what now?
I said, didn't somebody do a show on market cap? No, they just saying these companies are likely to benefit from if they get more support from clean energy bills. Let's look at Humana, healthcare sector. We know Humana got some money. Everybody named Mama get some Humana right now if you're older.
Hell yeah.
I mean, they debt is high, but shit, they looking really good. That's equity, but look at the chart. Mm. The other one is Molina. Mm. All them initiatives, all them healthcare initiatives they got out there giving people extra money in there to eat, to pay bills, to buy food. Man, if all them programs stop, that's gonna be a problem. I'll tell y'all that because there's a lot of seniors that's getting that extra stuff. 62 and older. Is this a new publicly traded company? Did they just RPI? Because they ain't got no data. Just a little bit.
Probably.
Huh?
No. Look at it again. What's wrong with the price?
Oh, it's a foreign company.
Yep.
Ugh, they doing good, but they got a little debt to equity. Oh, we missed that too.
That pop looked like it already happened. You go back. There we go. Yep. Look like we missed that, huh? Look at this. Missed it,
Shit,
Brandon. Huh?
I ain't missed that damn $700 sure. I'm paying no damn $700.
Yeah.
Hell,
Let's see if it has a. Let's see if it has an option. Let's see. I ain't missed that. Not I, shorty. Got an option. Oof. No, we won't be buying none of them. Everything. That's right. Ain't no volume there. I need to go further out. Okay, that's all I see right now. Let's see. Y'all fired
what?
because y'all ain't giving no tickets.
We always give you tickets. I'm learning from you.
He said
Hey,
we
you
always
could.
give you. He said we always give you tickets. You fired. Let's look at the campaign. Let me see. Let me find someone. I ain't no good. Let's see what let's see what the spider was. I'm gonna kill them kids. I'm not gonna show me the chart. They having too much fun, but I'm about to get them.
You said they have too much fun.
Yeah, I'm gonna take their ass back to school.
What they got like another week?
2, 3 weeks. Shit, I don't know. You know, I'm new to this stuff. I'll figure it out. Spy ain't been playing no games. Look at that. Look at that move.
Bounce right off that damn.
Huh?
I said bounce right off that damn blue line and kept going.
Yep. And rolled completely out. Yep. It sure did. Let me see. All right. So they talked about that. Let's see what else they're talking about up in this piece. What else making some noise after having made them people lose their job? That's when you take jobs like that, that's specific on a program, you should automatically assume that it's going to end in 3 years. You should be looking for your next job already. You should have already tried to move around in the company or shift around.
What's that? The contract?
No, even in regular companies, they'll hire for those temporary positions
Oh,
based on on their funding. But if the funding doesn't continue or the initiative doesn't continue, then the job just continues. How's your
gotcha.
job going, Brandon?
Hmm.
He said, huh? I mean, you steady. You rocking steady, aren't you?
What's that?
I said, how's your job going?
Oh, they pain in the ass.
He said, pain there.
It is because they got me doing 4 different jobs, and I'm still not getting the right pay.
That's how they do you.
Yeah, like they just hand out this handbook, and like they're rushing us to sign it, but like nobody's reading the inside of it. And I read like the employee compensation thing. So we're subjugated to get a review interview, but it doesn't mean we'll get an actual pay increase. And that was one
Mm.
of the things that was in the handbook. I was like, oh hell no, I ain't about to sign this shit. This is gonna be some bullshit. And then so it was worded fancy, but essentially something else was in the handbook where they can let you go just because.
Oh, at will.
Yeah,
Mm-hmm.
and I
They
was
didn't
like,
changed around the whole system on y'all.
hell yeah, they did. And like the handbook looks like some of the things has been copy and paste. Like they took a screenshot and put it on a damn thing because like some of the pages has numbers and some of them don't.
Mm.
So I'm like, what the hell? I'm not signing this shit. I'm not. Nah, you're not getting me.
What you gonna do though?
I mean, I guess I
At
could
some
probably
point,
decline.
huh?
I could probably decline to sign it
Well,
or just
you're gonna
sign
have to
it.
sign it. That's eventually, but you just gotta tread with caution to see how they moving. How does it affect your job? I mean,
All right.
hey, go to bed, knuckleheads. Look at this. Um, marathon. When does marathon? Oh, they already had earnings. You see the marathon chart?
Yeah.
You see them options?
Uh, golly, that's crazy. All them puts.
Yeah. Well, all on calls.
No, you got the puts at the bottom though, right?
No, they had to put on the bottom, but there's more calls than there is puts. Look at the open interest. Look at the total, and then look at the open interest.
Oh, okay, that's crazy.
Yeah, that's marathon. Not that expensive either. So check it out. Yep. I'm gonna be looking. I have to put some things together. They said Rose based on Trump's VP pick. That's where I got it from, anyways.
Hey, do you know about him?
Huh?
You know about Trump's VP pick?
Who was it?
I don't know. I'm just asking you. Do you know the guy?
Was it the guy from California?
I don't even know this guy's name. I just seen a picture of him today.
Let me see where he's from. JD Vance. Let's see where he's from. Let's see. Oh, he young. He 39.
Right, and I'm over here thinking, like, why did Trump pick him?
Got to balance out them peoples. Listen, it says um he describes he was raised a Christian but later identified as an atheist when he was in college at Ohio State. Now he a Catholic. Let's see. Oh hell, he was a Marine. He crazy as shit. Oh, he crazy. Here we
He said it's
go.
crazy.
Yup. All Marines are crazy. He crazy. I was trying to figure out where his demeanor came from. Oh boy. Oh, he gonna try to play on. Let's see where they going with this. His he's an American Indian lawyer.
The hell is that?
Huh?
He's American Indian law.
Diversity. You know how they're trying to shy away from being just the white Anglo-Saxon type. You know what I'm saying?
Mm-hmm.
Trying to bring in the diversity on that side. That's interesting. So there's gonna be some favor to the indigenous, I suspect.
Most likely us.
No, not us. Not you and me.
Mm-hmm.
Not you and me. We don't never get no favor.
Hell no.
Mm. Yeah, oh, I guess he matching Kamala Harris, huh? Indian background. He taking over.
How about they taking over? They been taking over.
You right.
That's why you gotta leave the states.
They gonna get that's gonna be a hard pill to follow with the immigration conversation. They're immigrant background. But hey, we'll see how it goes.
Think he got a shot? You think Trump got a shot? Uh,
That he huh?
you think he's the next president?
I don't think so, but everybody else seems to think so. He's pro-Israel, anti-China, causing some waves in Europe. They don't care about it. I don't know, be honest with you. I don't think people are giving it their true sentiment about it. We're about to find out when the elections come about. He seemed like he might be a little extreme, but I don't know. He a Marine. He was a Marine, so I know he gonna be crazy. That's all I know.
Yeah.
And I'm trying to see how these personalities gonna click. Because
Gotta go to class.
Marines like to be in charge. So I mean, I suspect they're gonna be all right, but I don't think so. I don't think so. Maybe he picked him because he's young.
Well, I think he tried to, like you said, he's picking a class of voters that he needs to get. Uh, go for the middle American Marines.
Oh, he said he went from a
Same thing with
huh?
no, I'm saying same thing with Biden did. He had to get some ethnicity underneath his belt, so he got
Uh-huh.
Kamala Harris
Yep.
pick up
That's
the
what I'm
black
thinking.
vote. So
That's what I'm thinking. He he said he wrote a book. He said he went from never Trump third to a mega champion. Yeah, he crazy. That's what we know about him. That's it. It's crazy all over it. When I said Marine, oh, here we go with this BS. And he a fresh Marine too, young. Oh God, he'll get on my nerves every time he talk. Because they so mean and they so aggressive. I mean, you have to be a Marine, but I'm just trying to see how these personalities go
right,
crazy. Pence was more reserved, laid back, still had the same tenacity, but kind of like set in the cut. I don't know about this little 39-year-old who just got out of the military. Probably just recently, either he recently retired or he just served a few years.
he probably just did a few years.
You say what?
So he probably did a few years.
Let's see. Let me see how long he been in. Maybe they're trying to change the view of the party. He from Ohio. He could have picked him because Ohio is usually like the state to win.
That could be one strategy.
You know, could have to say he only 39, he sure look old. Let me see how long he served. Or he could have picked him to try to show that he didn't have. Yep, he only did 4 years. Um, he didn't have a problem with the military. That's why I don't like him because he don't like vets. He always talking trash about vets, and I don't like it. He can't. That's where you strike a nerve with me. You say something bad about vets or the military service men and women, I don't like it.
Is there any true politicians that said bad things about vets?
He says that in the what?
I said, is there any true politicians or any
Usually they don't,
Anybody can say anything bad about this.
other than Trump.
Right.
He probably
But
has been
yeah,
the only. He probably has been the only one. Everyone else try to just respect the lane, and if they don't like it, they usually don't say anything. That's the quickest way to fall out with me. And you ain't put that uniform on. I don't care how good you do. I'll be mad forever. He don't. You know, when McCain, when he first, before he became, when he talked about McCain, I was mad then. And McCain was a Republican. I'm trying to see what he did in the military. He did
sanitation
four,
engineer.
he did 4 years, 2003 to 2007. So he not fresh out. He went in early. So he must have hit politics after that. He probably trying to smooth over the veterans. That would that sound like to me. You picked the vet to say, see, I like vets. I chose one. Because you know he didn't want to he he wouldn't go to the briefings for the military. He would always skip them when he was in office. I know I'm being biased. That's my only little contention. Other than the way I don't like the way he talk, but still. Who we lost?
You said what?
Oh, Chris Gold. Let's see. Ramsey
Yeah, you
said,
got
Mo,
somebody there.
you have thoughts about why nobody watches you. No. He said probably the worst viewership on YouTube.
No, I wouldn't say that.
I ain't no I ain't no Democrat. He crazy. Um the no, I don't really I don't really be paying attention to if somebody tuned in or not. It's obvious that people only tune in to religious stuff. That ain't nothing new. Or they'll tune into like some people just like certain type of information. Obviously, it doesn't never really bother me that nobody tunes in because I be learning from y'all anyway. I just like to do it live. That's it. I mean, we can really not go live, and still still be on here for hours.
Right.
I don't think people really realize that that
Um, shit. I was gonna ask you something else. Um, and you, if I want to talk to you as far as like the business aspect of it, do I have to book an appointment? Would you?
no, you can just hit me up.
All right. I ain't wanna. Cause I know you busy and everything. I was like, yeah, what can I hit up?
Usually, the best time is on the weekends or Friday. Sometimes I'm not really doing anything.
I want you to have your weekend though.
Oh, weekend. I just be out there playing on the computer, or sometimes I go to the flea market. Now you'll know if you text me and I don't respond, I'll still respond. But if I'm hanging out with my friend, I'd be like, oh, even back in a couple hours.
Okay.
But most of the time, a lot of the times, I'm just kind of just chilling on me, you know,
And then
especially.
what?
And the only people that I don't talk to is I don't just sit on the phone and gossip. So I won't answer those people calls. Or if they don't seem like they, you know. There's nothing meaningful. I don't want to talk to.
Yeah, I'm not. Yeah, I'm the same way. Like I hate talking to people who either talk about the same shit or like or just nothing. Like that's what I figure out when I get older. Like when you get older, you want more substance in your life versus just gossip and shit like that.
Right. Yep. Yeah, I just most of the time, and a lot of times I'm live, I'm actually practicing for something I'm probably gonna do in person, especially if I
Mm.
start doing PowerPoints. If I start sharing PowerPoints, um, then if people get mad, that's why I don't like to say nothing about politics, because people get upset. But if I start sharing um PowerPoints, then I'm getting ready for in-person class. Or sometimes,
Mm.
like today, I went live today. I said I wanted to pull up an article about business and I wanted to start seeing, okay, what is the latest changes, current changes in business. And that's why I went to the IRS article, the IRS. I said, you know what? I'm gonna start going through the IRS publications. And so I stopped at the mileage was the last thing we did. So next time I go live, I probably ask these questions right here and answer them. I said I was going to go through the publication because a lot of times, you have all those rules and regs out there with the IRS, and we don't never pay attention to them. We
Mm.
don't. We don't go read them. We don't look at them. We don't do nothing.
Nope.
So we don't know if something benefits us or not. We just rely on whoever the tax preparer or whatever the software is to give us the information. Um, and so a lot of times we get weaned out for a lot of good things because we don't know how to classify ourselves and we don't know why we classify ourselves that way. Um, so I'm gonna go through that whole publication, then I'm gonna switch this publication out, and then I'm gonna go to the what's it called? The expense one with the cars and the other expenses. I'm gonna do that one. I'm gonna just go through them like that. So if people tune in, that's cool, that's fine, and they get useful information if they're in business. If they don't tune in, guess what? Still fine, because I'm gonna be reading to myself, something I wouldn't ordinarily do by myself. Not the IRS regulation, anyway. hmm
That's
So,
good.
yep. And a lot of people who are self-employed, they're getting rude awakenings because the PPP and the EIDL money has worn off, and now they're in business. They classify themselves as a business. They're trying to stay afloat, and so now they're trying to understand, these tax rules. Because as before, they would have so much money from those different programs that they wasn't really paying attention to, whether they was getting favor from the business expenses or not, or the tax deductions or not. So, and not to mention, I don't have that. I'm not yelling or screaming or downplaying anybody else to have a conversation. I just have a conversation. So,
I mean,
huh?
no, I was gonna say. I mean, it's a good conversation to have anyway. So,
So like the other day I found uh I was going through some things and I was looking for something and I ran across because I was trying to figure out, it's a whole bunch of money out there. Um and I found out USDA. Is this it? They have this big grant. Hold on, this is not it. That's not it. They have a big grant. Department. I think it's USDA. They just put some money out there for. It's like, okay, look, this is another one. I ain't even see this one. 22 million to support underserved and veteran farmers and ranchers through 2501 program. I didn't even see this one. But this is not the only one. They just put out a grant. For 4.4 billion. Let's see if I can find it. And I was running across it. I was just looking for some stuff. Let's see, it's not it. And I was like, man, I didn't know they put that grant out. See, this is for like students who are in grad school for some graduate students get to help pay for those dissertations, master's and PhD program, capacity building grant. I was looking for this, so I was looking for capacity building grants, institution teaching research extension capacity building program. So this is like more for college and universities, HBCUs in particular. We're priced at when you need them. They
Right, I
can
was
get
about to
this.
say.
They can get this money. Easy way to get money. We about to get 200K capacity building funding for environmental justice. This has become big. Tribal. A big word right now. It's a big word in the grant world. But USDA just put out a whole bunch of money. As we can see, well, let me see, where's that one that I had ran across? That's why I like when sometimes when people will call me, they'll be like, I see you on the show. I want to call you later. Da, 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 da. I don't be giving them no time of day. I don't be having no. I'll be like, y'all don't even. Sometimes I'll get on here and I'll do a whole presentation that's really useful. I think this is right here. Community grants, EPA. I think this is one. And they wouldn't watch. So it don't matter what you share it. Folks ain't gonna watch. Folks gonna watch who they want to watch. I think where's it at? Here it is. Healthy Communities Grant. They put I'm gonna look at this one. Let me see. Healthy Communities. I remember. Grants for transportation in Hollywood areas. I could definitely apply for this. This with the VA? Where is that? $8 million is authorized. Oh, what? Let me go and get this right here.
Now, Another question I want to ask you, like, what are some things that you look for within the grant that make you do that? Go, what?
Because we already doing non-emergency transportation,
Okay.
and we already doing business with the government, with the VAs. So in that regard, any of the other grants, I was looking for more community grants. So like I know individuals who have nonprofits, who making some type of revenue. So I'll look for like community related grants that I know. Oh, this is zip file. I don't want zip file. I have to wait to get this stuff. That I know that they probably would be interested in. And so I'll look to see where hold on, Brandon. I'm looking for one thing. I'll look to see if, what are they asking for, if it's something simple that could be done. Now, I've been working on real big projects lately, so some of the things. So right here, they're supposed to tell you it's supposed to be saying what it is. I'm in the wrong spot to get the information. I have to get the actual synopsis, and it's probably in the zip file. But I know if I download the zip file, I probably won't be able to open. Oh, maybe I will. Oh, here it is. Let's see. I know on my iPad, so it may not open individual. Oh, yeah, it is. Here we go. Let's see. So this might be a winner. Oh, in Atlanta? Oh, heck yeah. One of our owners is in Atlanta. Let me see what they're asking. We could do rural areas. We got access to fleet of vehicles. We already know what all that means because we do it every day. Let me see what you're asking. 8 million is a lot of money.
Mm.
So it would be 50K. Okay, maybe they're trying to get over. Let's see what they're asking us to do. $50,000 per rural area is not a lot of money. Okay, no matching. Okay, submit application consistent with solicitation by. Where's the solicitation? Maybe I could pull this off though.
What was
But
that?
I'm trying to see what the scope of work. I haven't seen it yet. What are they asking us to do? I know they want us to go in the rural area, but we're gonna put ourselves in a situation. We've been doing it too long, so we kind of know. We kind of know how much it costs to do stuff. So there go that word again. By 4 o'clock, July 31st. I don't see the scope of work. How many run? Like, what are we doing for $50,000? Because if you don't get that, you know, 50,000 is not a lot of money. You'll mess around, be coming out the pocket. We're not concerned about none of that stuff right there. We got all that. Huh?
I was gonna say, do you think? I think you just passed up to where it's go.
I did?
Yeah, go all the way back up. Keep going. I think it was like A. Go, keep going, keep going.
Yeah, program scope is
Oh,
defined. An applicant has, yeah, we gotta find it first. I'm on the laptop to do Control
Control F.
F. Yeah, I'm on this. I'm gonna find it. Nice little grant. Yeah, see, okay, hold on. Wait a minute. See, we could do all of this because we got midi route. Yeah, we could do all of that. We got systems to do that. Unless they're saying that we find the veterans to transport. We have cameras and all that, so we have that. We ain't concerned about no audit. We fly straight. Okay, something I'm missing. All right. One of the documents I'm missing. Looks at the scope of work. Oh, where'd it go? This one. Did this open? What's this? Oh, I know what that is. What that is. No, we don't want to delete it. Oh, here we go. This one. Maybe this is it. Oh, so they're just giving you areas and then you select where you go? This is interesting. So they're giving you certain areas that they need supported. We're not there. We're not there. Now it might be a whole nother ball game. Oregon, Nevada, New Mexico. Which one of these are we? Okay, Mississippi. We incorporated in Mississippi. You might can make that work. Louisiana, Kansas. Oh, okay. They just made this challenging. AK is Arkansas.
Yeah.
Might not be a bad deal. That might not be a bad bid right there. Because it's down south and it's close to True. It's not that far. It's on the like a little above Alabama.
Depends on where at.
Like right above it, right?
Oh, what you talking about Arkansas?
Yeah, between Georgia and Alabama.
Yeah, right above it, right next
Like
to
right
Missouri.
above, right? Yeah, next to Missouri. Yeah.
Yeah. Oh no,
Um
right next to Tennessee.
okay, right under it, right? Or next
No,
to it.
right
To
next
the
to it. Right
to the
next to
left.
Tennessee.
Okay.
That'd be like a right of the state.
Okay, I see the catch 22. They tell you what zip codes they want you to cover. We're not in Arkansas, but we can be. In Arkansas may not be a bad deal. We may not go to Kansas. I don't think, and I was looking to see Texas. Texas might not be a bad gig either. Okay, I'm not sure we're gonna shoot it to them tomorrow. Look at that. Okay, so yeah, so if it's something that I'm familiar with that somebody else does, let me bookmark this. Oh, where'd it go? I lost the page. Ain't this something? Let's close this stuff out so I can show you what I'm saying. So I have lost the page. I think it's it right here. Grants.gov. So grants.gov is federal, right?
Mhm.
So you have criteria right here you can look at. You could do keyword search. So like let's say if I was looking for community development, these are usually, you know, things that you put together. Right. So this is an infrastructure grant. Let's see. Community development jumps out. Maybe so if it's something you've already put together, a lot of times you can't match your program with the grantor. So what you have to do is go see what's like this right here. Thunder would like this. Cybersecurity Thunder or Kyle. Cybersecurity grant, a training workforce development training for cybersecurity. Once you read through all this stuff, and they're doing a pilot program, it's not a bad idea to implement that. To do a pilot program, we might need to jump on that. So, like, if you're going through, so if you have, if you are connected to organizations or familiar with organizations who are doing grants, there's small business grants too, but it's far and few in between. But if you connect, like I'm connected with a group who do festivals. I'm connected with somebody who doing housing repairs. I'm connected with somebody who's doing who's working with seniors, who's working with the youth, performing arts, home in
Mhm.
home care. So like if you are connected or if you know people in those circles, you could always look for a grant affiliated with those areas. Excuse me. Or if it's something for yourself, you would go to search for grants, and you can either do all search or you can go over here, and if it's a you could just do just grants, click just grants right there. And eligibilities, you could put in for profit business. And then if it's a particular agency, you can check it there. If not, you could do all and same thing there. And then you could go search and see what comes up or is on the bottom. So everything, I guess it was changing as we went. And then you could look through these and it'll take a minute for you to go through because that's 791 grants. And so to narrow it down some more, let's see, let's just do forecasted. Let's see how many was forecasted. And you can look through and look like this all has to do with disability research. So now if I was a school, I would look for research grants, especially if I had a science department. That could be money they could be bringing in. Watch, let's look at it. Research development. Oh, I didn't want to do employment project. Let's see. We don't need not that one. Let's look at the research development one. They have to do with disability stuff. Otherwise, oh, I'm clicking on the wrong thing. You click on the blue hyperlink. This one's for more for community living. 600K for a grant to do research about community living. Now, sometimes what you can do, like if you know somebody in the like in a school, in a like a university or college, uh, you could do you can partner with them if you find a grant and say, hey, if I find it, like for example, right here, this employment program, right, for disability. You can go talk with the school, like let's say a tech school, right? If this grant is to teach people with disabilities, something of that nature, they get the document first. It's probably not gonna open it. But if this grant is to teach people with disabilities or open up more opportunities for people with disabilities, you can always say, I want to write with this grant and I want to partner with the school, partner with your like one of your departments. It could be a rehabilitation department, it could be psychology department, it could be um, a finance department, or any departments that would be affiliated. The science department with research, right? And you could say, if we land this grant, y'all do a memorandum of agreement based on whatever the project is or whatever you're working on, maybe whatever the research is. You could pay that instructor, or you could pay some of the students to participate in putting the research together. Makes sense?
No,
Or you,
definitely.
or huh?
No, definitely it does. I mean, it's clicking for me. Just let you know because I got to hear it repeatedly.
Yeah. And then the like this spinal injury, right? Me too. I have to do the same thing. I hear it over and over and over and over. Right. So this would probably be in a science department. If you find the RFP, you're affiliated with the school. They say, hey, listen, I found this grant. I want to, gain a relationship with the person in the health department or the science department and say, how would you like for you and your students to help me do this research on this grant for spinal cord injury? And if they agree, y'all write it together, you submit, you be the administrator, which means you get 15% of the grant for the administrator, meaning the paperwork and all that stuff it takes. Submit back, and they doing the research, and you paying them.
It's crazy. Yeah, I don't know why I ain't get on to grants.
Yeah, so like the grant. So I'm learning a lot of this stuff I just said. I'm learning from other people who's been doing it since been doing it. And so they've been going to like this one right here, rural community opioid response. So my homeboy has a opioid clinic, right?
Mm-hmm.
And they have a nonprofit and a for-profit program. This grant will be perfect for him to submit for. They already doing the work. Probably already have a grant written that could fit right into it. And all they gotta do is submit.
Mm.
Yo, it's a lot of money. Yup. So, now for like uh a lot of times though, this is government. But you also have, if you're gonna look, let's say, what's the largest manufacturer or largest business in your area?
What do you mean? Like
In your
the
community?
what do you mean like manufacturers or like company
Yeah.
or
Yeah, manufacturers, company, whatever.
don't say what Target,
You say Target?
yeah, Target, uh, IDW, IDT, Target.
Um, uh, Chicago. I'm sorry. Wait. What's the zip code?
Mine's 60478.
see. So the person that you want to look for is the marketing, or it may just say community outreach manager. That person has access to the grants for the company or the organization. That's the person in the company that you would want to reach out to for their grants. They may have a community grant. So let's say you wanted to teach, 16-year-olds um an introductory uh stock market or investment course, right? So you could go to a company with your proposal and ask them to, if they have an outreach grant. So if I looked up, let me see if Target has a grant, community grant. And they do. And you can see your proposal, but let's see what they fund. So they give out a lot of money. Corporate citizen grant. So they give out natural disaster money. And oh, this one is invitational only. First one, key market grants. Oh, this one looks like it's for social and environmental issues critical to vital resilience community. Invitation only. So the first two is invitation only. So you have to figure out how to be on the list. And then Target gift cards. Well, obviously they do gift cards. So they give gift card donations to 501c3s or schools or public agencies to support your initiative. So they don't give any funding to local. So what's the other manufacturer? Brandon went to sleep.
I have my phone on mute.
Oh,
No, if you trying to go to sleep, no.
no.
I ain't no hold you.
Let me look at the other manufacturer real quick.
IAW is ITW Deltar.
Oh wait, ITW.
Yeah, Deltar.
Spell it out.
DE. I think it's TAR.
Oh, Deltar.
Yeah.
Look like they got something going on. Philanthropy and community involvement. Cultural giving. So they do a 3-to-1 match on charitable colleague giving. Okay. And then what else y'all do? $15 per service hours for qualified. Oh, that's for volunteering. All right. Supporting under-resourced communities. So they give to under-resourced community. So they partner. Commit to a initiative. Okay. Commit to a neighborhood initiative. Should they poured in some money? 2.5 million. Investment plan in support of Austin and Belmont Craig community of Chicago. You know what that's at, Brandon?
Where is it at?
Austin and Belmont Cragen.
I think that's up north.
Okay. They expected to spend 38 million. So they doing a little something. Then they Okay, they invest in STEM. Let's see what they did. During the final 2 years, students chose elective path. So what they do? Oh, they gave us scholarships. 72 million in it. That's a lot.
Yeah.
They gave to students who 70% who's attending college for the first time. 270 graduates. 90% of the graduates pursuing their higher education beyond high school. There you go. They're giving us some money. So that's another way you could think about the companies in your community. If you had a community initiative or you had an initiative that you was gonna do,
Mm-hmm.
you can look for their community involvement or community grant. So you can look for something that's not government.
Gotcha.
If you was something like that. But yeah, we could talk more on it.
Okay.
All righty. Thank you for listening.
Problem.
Let me see. I'm in log out of this thing.